Welcome everyone. We'll be starting shortly. We have Matt Maley backstage. We're just going to wait for 5 p.m. Eastern Standard Time. Let all our fellow traders enter the room and we'll get started. This will be recorded, so if you're watching this live, we will send you the recording afterwards, as long as you register to the Zoom which this is being hosted on. So sit tight. We'll be starting in about 15 minutes or so, maybe less. Let's get some people trickling in and get your questions ready. Matt's got so much information. I learned so much from him every single time he does a webinar. Really looking forward to today's, especially with what's happening around the markets these days. So sit tight, folks. 15 minutes or so, we'll get started. And like I said, get your notepad ready, get your questions ready, and we'll be here soon. Welcome everyone. We're just 5 minutes away or so from kickstarting today's masterclass with Matt Maley. Sit tight. In the meantime, drop in the chat where you're listening from, watching from. We're always interested in seeing where people are tuning in from. I'm up here in Toronto, Canada. We've got Matt Maley, we have Rodrigo, as well as panelists. So we'll just wait another 5 minutes or so, get some people trickling in here, our fellow traders, get the trader community all in here to learn together, earn together. Stick with us. 5 more minutes, we'll get this show on the road. Drop in the chat where you're from. We have Michael from Columbus, Ohio. Welcome, Michael. Thank you for joining us today on a Wednesday. No better day to learn about trading than a Wednesday at 5 p.m., all right? We got Lo from Denver, Colorado. Welcome. Europe, Lander from Europe. Welcome. Brad from North Carolina. Connor from DC. Greg from Connecticut. Vanya from Deerfield Beach, Florida. A little jealous about your weather there, Fania. Rick from New Orleans. Bob from Atlanta, Georgia. How about them Falcons this year, right? Another Georgia, 2 Georgias. All the Georgians want to learn about trading. Raj from Jamaica. So far, maybe the most exotic country out of everyone. Raj, are you learning? Are you trading while you're on the beach, Raj? Nova Scotia, another good old Canadian. Frankfurt, Germany. We have the whole world tuning in to learn about options from Matt Maley. By the way, if you don't know who Matt Maley is, he's frequently on CNBC. So whenever the markets are going kind of hectic or a little volatile and people want to know what's happening with the markets, they call Matt Maley. And Matt Maley goes on live television on CNBC and he gives them his perspective on what's happening with certain stocks or certain markets. And they go to him because he's the one that's giving insights to hedge funds. So I always say it, he's the hack to the markets for myself. Welcome, Michael from Port Charlotte, Florida. We'll give it a few more minutes here. We're getting a lot of people still trickling in, so let's wait till we have everyone's attention and everyone's here, everyone who registered. Drop a 1 in the chat if you are interested in learning how to find winning options trades. That's what we're going to cover today. Matt has a very good knack for finding simple options trades that give some good returns pretty quickly. So drop a 1 in the chat if you're interested in learning about options trades. A whole lot of 1s. Good to see. Good to see, guys. And that's what you're going to learn today. If there's one thing I can recommend is A, have a notebook to write some concepts down, and B, get questions ready. This is going to be probably one of the most interactive masterclass webinars you've ever attended. So be prepared with questions because we will ask every question that we see to Matt Maley, as long as it makes sense to ask Matt Maley that question. But be prepared for questions. We will answer them. A couple more minutes. Rodrigo, you're in the house. Matt Maley's in the house. We're still getting a lot of people trickling in, so we're just going to give it a few more minutes. Sit tight, everyone. We appreciate your patience. If you are chatting in the chat for Zoom, be sure to select everyone, just so everyone can see your questions, everyone can see what you're typing. We like to build it all off of community. We want to do it all together. So make sure your chat there on Zoom is everyone.
What's up, Harvey? How are you?
Good, Rodrigo. How are you?
I'm doing good. Everybody here that is in the Zoom will get the recording. So we'll probably get like 50 questions from that. So if you can just help your fellow traders, let them know. The recording will be sent to the registrants here on Zoom.
Perfect. So we'll just give it another minute or so. We got a whole bunch of new people that just joined in. So welcome everyone to today's webinar. Welcome, Julia. We already went through, everyone kind of dropped in the chat where they're listening from, where they're tuning in from. Let's get our fingers a little warm though. Rodrigo, do you want to ask everyone here in the audience a question or something about the markets, or maybe drop some tickers in the chat just to get your fingers warm, because we are going to have some time for today's webinar to go over some tickers. So if you're any tickers that you're interested in, or you're watching, or you're trading and you want Matt's perspective, drop it in the chat because we're going to go over them all
Yeah,
later on.
let's say type in the chat, what is the number one theme that you think is impacting the markets? Do you think it's inflation? Do you think it's the chip shortage? Do you think it's the infrastructure deal? Do you think it's CPI? What do you think is moving the markets now? What is your biggest concern theme wise? That will lead us to the tickers. Let's do a top bottom approach, guys. What is the biggest theme that you guys are concerned about in the market, considering everything that's going on? Lewis, chip shortage. Mark, inflation. Rajmi, supply issues, high frequency traders. Yeah. Inflation, definitely Ricky Carter. I see that. Yep. Inflation. Global economic recovery diminished. Absolutely, Meg. Okay, you guys are going crazy here. China issues as well. Yes. Shipping time, supply chain. Of course, we're going through supply chain issues. Let's see what else you got. All above and politics. Lake of understanding of the effect of COVID. Okay. Yes, absolutely. There's some of that. China, US uncertainty, inflation. Okay, Louis Bowie, I see your message there. Supply, demand. Okay. All right. Feels like we may be at the edge of a bubble. Okay. Well, it sounds like a lot of you guys are in tune with the markets, which is pretty awesome, because we are going to have a segment today here with Matt Maley where I will go over some of the things that you guys are concerned about, that as traders, we are all concerned about. And we definitely want to get that intake. We definitely want to get that perspective from a pro chief market strategist like Matt Maley, 40 years in the game on Wall Street. So, okay. So I see what you guys are talking about. And earnings. We also need to talk about earnings. Who knows if they will impact the market? There's a lot of things going on. And we're going to get some answers today from the man himself. So stay tuned, guys. Here, we're going to start in a couple minutes. We're getting everything set up here, getting Mr. Maley in the room here as well. So, Will, yeah, we mentioned it earlier. Everybody's going to get the recording who's in here. But let's stick here with the stability of the top of government, fear. Okay, volume and price, supply, demand. All right, well, we got a lot of things here we're going to talk about today. So just hold on tight there for a minute, and we're going to get started, guys.
All right. So I just want to make sure, can everyone see what Matt is sharing here? You should be able to see his presentation shortly. Just drop a 1 in the chat if you're able. Oh, perfect. Bill, you're quick to the punch today. All right, Matt. So your presentation is being shared. We're still getting some people trickling in, but maybe if you just want to start with maybe a quick about yourself, Matt, and then we can kind of get the show on the roll. You can go through your presentation. We can go through some tickers and some Q&A at the end. Matt, I think you might still be on mute.
How about that? How about that?
There you go. You're just setting up the stage, you know, get the anticipation high. So everyone, can you guys hear Matt and see Matt's presentation? Perfect. All right, Matt, I'm going to stop talking. I'll let you start with just a brief introduction. And then by the time we get in the meat of the webinar, we should have our full registration count.
Sounds good. Sounds good. Thanks so much, Harvey. Well, welcome. And what's obviously an incredibly exciting time in the stock market. One of the problems, though, is that what's exciting for the market is not so great for the bulls, maybe, because it's obviously we're seeing a lot more pickup in volatility. And I think, but the thing is, for those who are prepared, we can really profit from it. And one of the things you can see that my whole thing is you hear so much on Wall Street is like, we can help you weather the storm, weather the volatility. Well, that's fine. But what I would really hope to try to do is a former trader, as well, I'm still a trader, but is really to help people profit from the increase in volatility, which has already started, and I think going to be with us for a while. But anyway, as Harvey said, I'm here. I work at Miller Tabak as the chief market strategist. But just give you an idea, what my background is and why the heck you should even listen to me, is that unlike most strategists who are economists or analysts of some sector analyst or something, and nothing wrong with that, and fundamentals are very important. But I was started on a trading desk and spent 25 years. Those who are around a long time know Solomon Brothers back in the 70s, 80s, and 90s was the most powerful trading desk in the business. I wasn't there in the 70s, but I was there for 15 years in the 80s and 90s, and then 10 years at Merrill Lynch's institutional trading desk. And there I talked to the trading desks of the biggest accounts in the country. That would be the biggest mutual funds, hedge funds, insurance companies, et cetera. And that way, you really get to feel what's not just what should happen, because on a theoretical basis, a lot of economists and analysts talk about, but as a trader, you had to know what was really happening, what was going to happen, what is happening right now, because you couldn't afford to worry about theoretical things because you could lose your shirt very, very quickly. And so that's really what where my background comes from. And the whole idea, is for me is to use, obviously, like I said, fundamental analysis, of course, is very important. We want to know what the fundamentals are for specific companies and for the overall, macro analysis for the markets. But I also like to look at technical analysis, and which is very, very important, and also sentiment, positioning, which can be very important. Of course, it's been a big thing with meme stocks this year, but it can be very important in all aspects of the market. And really what it comes down to is what I said, theoretical issues versus what's really happening. And one of the oldest sayings on Wall Street is that the market is always right, which is a bunch of baloney. The market is only always right eventually. And, say a million times, was the market right in the summer of 2007? Of course not. It got clobbered. Was the market right in the spring of 2009? No, it was way oversold. It was dead wrong because people got margin calls and threw the baby out with the bathwater. And those created unbelievable opportunities. And that's what we really try to do. Well, as I try to do here is combine all these factors and so that you can really maximize your return. We all should have something in those long-term, whether it be with a certain number of mutual funds or whatever kind of funds you want to be in, and insurance accounts and such, even some index funds, and those big long horizons. You want to have a big bucket of that, that's fine. But you want to have another bucket where you can maximize returns, a little bit more active trading, and that's what I try to do with my my series, my tiers and the market letters that I do for Benzinga. Tier 1 is more long term, then tier 2 is more 3 to 6 months type of horizon, maybe in a full year. And then tier 3, we talk a little bit more about shorter term things, sometimes with options. And then we also have a chat room that we started just in the last couple of months, where I'm in it all day long. We talk about stocks, looking for opportunities for short-term trades, and that's really where the options come in. We're really trying to find some opportunities to make, the really outsized returns where you can make, 20, 30, 40% in a very short term, in just over a day or two. And in some cases, we've been able to make in the multiple hundreds of percent just recently and consistently on a regular term. Not all of them work. We do miss risk management. If when I always say, if you lose more than 10% in a regular stock, get out. Get out and maybe look to get back into it another time, but you've timed it wrong. Just get out, move on. With options, they're more volatile. You give yourself a little bit more time. I'm sorry, a little more leeway. It's more like 20%. But there, of course, you spend less money when you use options. So you give more leeway. But the thing is, if you're hitting, if you're batting 700 or 800, you're never going to bat 1,000. But and those trades are getting 100, 200, 300%. Those 20% losers, they happen sometimes, just like the 8 to 7% losers you get in regular trades. They're going to happen. The greatest traders in the world, the greatest investors in the world have all had losses. It's just, you can't get around it, and you can't sweat over it. But anyway, but what I try to do, and again, through all these, whether it be the market letters or the chat room that we've just started up here in the last few months, is not just, give some good picks, get some good ideas, but also to educate people, tell them, how can you find these names? And what obviously what I'm trying to find is key turning points. In some cases, they're key long-term turning points over something will last for many months. This time last year, I was pounding the table saying, you got to buy energy stocks. Everybody hated energy, everybody. I was pounding the table. Got to buy energy stocks, you got to buy bank stocks. Those all worked out really well. Mainstream Wall Street, who just follow the fundamentals, they didn't turn bullish until the first of the year. They've still had great gains, and they're bragging about it all the time, but they're half as big as the ones that we made here because we've been talking about issues more than just those traditional fundamentals. And what I really try to is show people on a daily basis, whether it be in the chat room or on these letters, is why these things are seeing big moves at key times. And again, it's just kind of saying there, if you really just look at what the Main Street Wall Street does, they just follow the crowd because their job is gathering assets and keeping them. And there's nothing wrong with that. But they wait for a real trend to change and really be firmly established before they really hop on the bandwagon. And they miss a lot when they do that. And the key example was, again, those calls that we were able to make here last year. And well, that was just a year ago. We've made many over the year on top of that. And here's some of the things we've done. When I talked about the energy stocks a year ago, but also in this spring, Viacom was an unbelievable stock. It was one of those meme stocks, but it wasn't one of those crazy meme stocks that nobody is like, AMC, they're going out of business. What are you talking about? Viacom was never going to go out of business, but it did have a big short position. So they ran the stock up. It got to a ridiculous level. I came in and said, you should short the stock, sell it if you own it, and buy the put options. Well, guess what? Okay, the stock had rallied 285%. Okay, in just a few months. That was just ridiculous. I said buy the options. The options went up 2,500% in just a couple of days. Not 25%, not 250, but 2,500. Okay, and then they just kept going. There was up over 10,000% for those and some people who held on to them. I started taking profits at 2,500. Don't like to get greedy. The same thing that happened earlier this year. Nvidia. I'm going to give you a bunch of more examples of that. But the whole idea is here when you get into these options trades, there's so much guessing going on. It's like, geez, it looks overbought, or they say, hey, the stock's had a big run here, and people go, it's got to go a lot further. Well, actually, the stock's becoming very overbought and very overloved, or maybe the ETF is getting very overbought and very overloved, and the actual worst thing they could be doing is buying, and they end up losing their shirts. So that's why we want to make educated decisions, not just guesses, and that's really what I'm trying to push. And I guess right now, one of the main reasons that we're doing this seminar right now today is because I think we're at a key turning point on an intermediate term basis in the overall market. And that, again, this is going to create some great opportunities. And the thing is, too, is in today's market, we've seen some deep corrections, and we had one in 2018. We certainly had one in 2016, not quite as deep, and of course, and the pandemic in 2020. But okay. The okay, sorry, I just thought Harvey was sending me a little message there. Maybe I was talking too fast. I wanted to make sure. Sometimes he gives me little beeps. But anyway, but I do think, there's several things that we need to be worried about right here. And I do think that the market is going to see a correction, and probably a deep one, before the year is over. And we all heard about how the stock market is expensive. It's trading at more than 20 times next year's earnings. And more importantly, it's trading 3 times sales, 3 times sales. Okay, that's by far the most expensive it's ever been. And you can fudge earnings. So PE ratios can be fudged. They can play around with their earnings and take these write-offs and things like that. Sales are sales. Unless you're completely lying, and you'll go to jail if you do that, your sales are what they are, and it's the most expensive ever. And but we all know that valuation levels are lousy timing tools. The market's been overvalued for a long time now. But the other thing we're really looking at is debt, margin debt, and leverage. There's a huge amount of leverage in the marketplace. Just look at this thing right now with what's going on in the market. We have, this is the margin debt. Okay, it is got it to all-time highs. Look what it did here once it turned down. 2007, the market got obviously horrible bear market. Same thing happened here in 2001. 2000. Of course, when the dot-com bubble burst. Margin debt going high is another lousy timing tool. It's only when it starts to turn down, when people start to delever, and you can see it's starting to come down. That's a big concern for me. That's why I'm worried about that we are starting into a time frame where the markets can come back. And one of the big things I'm saying right now is that if the market corrects a little bit more, and when we were down 5% at one point, we go down 5 or 7%, that's fine. And we could recover from that if the Fed decides they're going to pump the markets back up, even though they're still very expensive. The problem is, once it gets down 10%, those people on Wall Street, because they're paid to be bullish, so they can't say things that are overly bearish. They say, oh yeah, we could see a 10% correction. Actually, that can't happen right now. We get to down 10 to 12%. All of this leverage, all this margin debt is going to get margin calls, and you're going to get a much bigger decline. Okay, so again, I am not a perma bear by any stretch of the imagination. Back in March of 2020, I was pounding the table saying you got to buy the market overall. I did the same thing, of course, last year when everybody hated the energy stocks, hated the bank stocks, and I'm wildly bullish on it. I'm no perma bull. You get some of these people out there who are screaming, the world's coming to an end all the time. That's not what I'm saying. I'm just saying is that the Fed is out there. I'm sorry, that the margin debt is high. That means leverage is very, very high. At some point, that has to be unwound. And it looks like it's becoming more and more evident that it could be happening soon. Now, other things just to talk about real quick, and I don't want to spend too much time on this because I want to get right into some things that have shown you what we've been able to do and how we've been able to do it, and making some real good picks. And then also talk about ones that I'm seeing right now that should be really good picks over the next couple of, next few days and next few weeks. And then after that, we'll just open it up to you guys, and I'll have my Bloomberg up, and we can look at any stock you want to. Anyway, one of the biggest reasons, I know a lot of people were talking about when we were setting up for this, talking about how inflation, that is a big concern for me. However, the most important one right now is China, and it's not China, Taiwan, and that is important. Don't get me wrong, and that is a concern. But China has gotten involved in a major deleveraging process. Okay, deleveraging and de-risking their economy and their markets. Okay, they started with Alibaba a year ago. Everybody thought that was just they just wanted to, Jack Ma was getting too big for his britches, and they wanted to calm him down. That did, but then all of a sudden realized. Then he started putting on major regulations on a lot of different tech companies. Then he went after the education business. Then they went after the gaming business. Then they went after the video gaming business. The gaming, I'm talking about casinos. Then he went after the video gaming business. And just this week, now he's talking about the banks. I mean, when they start talking about that they're going to start regulating the banks even more, that they are very serious about their de-risking and deleveraging process. When you get an economy like theirs that has been wildly dependent on ramping up risk and ramping up leverage, when they reverse that, at least slow it down, they're the second biggest economy in the world. That has to have an impact on the rest of the world. That's going to slow us down. That's going to impact us. Well, guess what? The Fed and the ECB, European Central Bank, they're doing the same thing, or they're about to, with tapering back on their QE programs. Now, this is nowhere near as restrictive as what China's doing. But the point is, we're going to have a lot less stimulus in the marketplace, and the market, it's not been only the stimulus that has helped the markets. The economy and the market and the earnings have come back in a big way. But the fact of the matter is, all of that stimulus took the market way above where the fundamentals were, way above in 2020. Well, they've been slowly catching up. When you're trading at 20 times earnings and 3 times sales, it still hasn't caught up. When a market gets that overvalued, it usually meets somewhere in the middle. It's got to come back down. And so therefore, I think it's going to start now with China deleveraging and the ECB and the Fed doing the same thing. And again, we can talk about inflation when we kind of go into the Q&A thing. I think there's a little question now that this is not a transitory situation, and that's going to have an impact on earnings growth. We've been so reliant on earnings growth, but even though earnings growth has been spectacular this year, it still hasn't been enough to make the market, have to catch up to the market. It's still an expensive market. And like I said before, leverage works in both directions. At some point, this deleveraging process, you're going to get margin calls, and it's going to become a much bigger deal. Now, just talk about what's going on with the S&P 500. We can see here, it's funny, we talk about technical analysis, and I'll step back for 1 second. I just want to talk a little bit about technical analysis really quickly. Is that some people think it's just a bunch of lines drawn on a chart. You can make it look any which way you can. That's not true. I mean, if you're a good student of it, sometimes people overdo it and get too complicated. But do think about this. We all know, and every fundamental analyst, whether it be analyst, economist, will always tell you, the stock market moves 6 months in front of the economy. It goes down 6 months before a recession. It goes up 6 months before we come out of recession. Same thing with individual stocks. Individual stocks roll over, 6 months before their fundamentals roll over, and they pick up from a sell-off 6 months before the earnings turn higher. And the reason, so that's why we look at charts. And the reason for that is, I mean, think about it. Somebody has a company, it's not been doing well. They've had to lay off people. They've had to close factories. And then all of a sudden, after 2 years of this, things get better. Well, what do? They have to go out and hire more people. They have to retool their factories or maybe build a new one. They can't do that overnight. That takes time. That takes a lot of time. Okay. So what happens is, the army, the really professional investors, the guys at the hedge funds, mutual funds, they have an army of analysts that turn around saying, hey, this company, they're hiring more people. They're retooling their factories. Their orders are going through the roof. Don't wait for these earnings to turn up. They're not going to turn up for another 9 months. Let's buy the stock right now. That's how the rest of us schmucks can see that's going. I say, oh my gosh, this thing's turning up. We don't really know why, but the real professionals know why, and it gives us a chance to look at it. So let's get back here to just to the S&P 500. Now, their moving averages are things that people look at closely. The 50-day moving average and the 200-day moving average are ones that people look at quite a bit. The 50-day is about a quarter. It's a little bit more than a quarter. So that gives you kind of a short-term trend, which way it's going. And the 200-day moving average is about a full year. Again, it's a little bit less than a year, but again, it gives you an idea of what's going on a little bit longer-term basis. However, there are also some people, especially short-term traders, that like to look at the 20-day moving average and the 100-day moving average. And look at the 100-day moving average on the S&P 500 this year. See how many times it's bounced off that level? But each time it's bounced off really quickly, even dipped below it, right after the election last year, right as we were going into the election. And then it rallied back. Okay, then it held here again. Here, it bounced right back and then retested. It's bouncing along this line. It hasn't bounced back immediately like it did all those other times. In fact, it's a little bit below it. So what I'm looking at right now, and I think things could be coming, here, let's look at this. We had a low, a lower high, a lower low, only a slight lower high, another lower high. What's this going to be? Is this going to give us another lower low? Well, if the S&P drops below 4,300, and again, I don't mean 42.95. It has to be, we can always get head fakes, just like we got here. It got below it just a little bit by a percent or so. It's when it gets 2 or 3% below, then you really know, oh my gosh, this thing is really broken. And when you get something that's bounced off 1, 2, 3, 4, 4 or 5 times, that shows that it's at a really important level and that it should bounce. Well, it hasn't bounced this time. And now it's looking like it might roll over. And if it does, you break below that 4,300, it's going to cause some problems. That's going to take us down to the 200-day moving average rather quickly. I don't have that on this chart, but it shows that the market is a little dicey here. And for the reasons that I've been saying, I've been talking about, I think it will break down, and we want to be able to take advantage of it. Okay, and just another one here, the head and shoulders. I didn't really draw you can see it's called a neckline, but you can see here, if it breaks, there's a shoulder, head, shoulder. If it breaks below that 4,300 level that I was talking about, that indeed would not only take it, give it a key lower low, take it below its 100-day moving average, but would also take it below a head and shoulders pattern. And so we can kind of look at these things. So we're looking at fundamentals. We're looking at what's going on with earnings growth likely to slow because inflation is going to cut into margins. We see what's going on with the liquidity flows, they're down, they're turning down. And now you look at the technicals, they're all kind of coming together here, I think, for something that is going to be bigger than we've had. So again, that's what I've talked about before, is that we want to do more than just weather the storm. We want to profit from it. And there's so many other ways we can do it today. In the old, you go back to 1999, 2000, when the dot-com bubble burst. And I'm not saying we're about to go into another 50% decline in the stock market, but we could be, a very sizable one. And anywhere from 15 to 20% or even a little bit more. The thing is that back then, or even before in the 87 crash, there were so few tools people could use. If you wanted to buy a put option, you had to go out several months. I mean, now you can buy an option on the index ETFs, the SPY, the QQQ, which is the NASDAQ 100 ETF, the IWM, which is the Russell 2000 ETF. You can buy, they have options that expire 3 times a week, Monday, Wednesday, Friday. So you're constantly, you can buy puts to hedge yourself or make a negative bet all the time. For big stocks, for many stocks, they're not 3 times a week, but they're once a week, every Friday. In the old days, you wanted to buy a thing today. If you wanted to buy some protection against an Apple computer position, you had to buy an option that expired in December. That's expensive because the time value, okay, the time issue. You're buying a insurance policy through December, they're going to charge you more because it's 3 months. You buy an insurance policy for next week, you don't have to pay as much because the chances that it will go down in a short period of time are less. So it's much cheaper and much easier to do it. And of course, we have inverse ETFs and inverse leveraged ETFs. So people can take advantage of this that who couldn't, even if they wanted to, or at least couldn't do it to the same degree that they can now. So this is really, which is great for us. I know we just talked about, I've already talked about all this. Just the one thing I'm going to talk about also is that sentiment plays a very important role. That's the one thing right now. Sentiment, people are a little bit cautious on the market. That's one thing we don't have going for us. That we don't, 3 or 4 months ago, everybody's saying the market looks great. But that's changed a little bit. And positioning is always very, very important. People talk about the meme stocks and how, they've been squeezing short positions. But what I try to look at is in the broader sense, what's going on in the S&P futures? What's going on in the bond futures? Are the futures traders, are they really bullish? Are they loaded to the gills? I mean, one of the best calls I made was last August, and again, this past August, 2 Augusts in a row on interest rates, when everybody got short everybody got long the bond market, thinking the bond prices would continue to go up and rates would go down. And there was no place, it didn't matter what the fundamentals said. There was no place, nobody left to buy. Rates had to go up. Sure enough, they did go up strongly last year, and now they're starting to go back up again this year. Same thing, August, September, and now into October. So those are the things that we try to look at. And then we look at correlations. I mean, one of the things, we go to Federal Express versus UPS. There's an obvious correlation there. We Cat Tractor versus John Deere. Cat Tractor's trading way below John Deere. It should play catch up to that stock. That's another correlation. But there's some ones that a lot of people don't realize. We've made a real good money on our options in Home Depot, some put options in Home Depot this year. We made 300 or 400% because the price of lumber had gone down significantly. We crashed this late spring and summer. And Home Depot is very highly correlated to the price of lumber. A lot of people didn't know that. Well, sure enough, we bought put options in Home Depot and because it hadn't gone down yet, and we knew it would, and sure enough, it did. And we made some real nice money in a very short period of time. So there's a lot of different ways, and rather than just using the old plain old analysis. Here's some of the calls from the chat room that I've been talking about. We talk about this stuff every single day. And you can kind of look at these. I think Rodrigo can step in here now because I've been rambling on here for half an hour.
No, it's okay. It's okay, Matt. This is definitely a great information session that we're having here. Great workshop that we're doing. Some people were just asking me about how to join the chat room. Make sure to put your chat settings to everyone. Otherwise, I'm the only person that can see your chats and questions so that we can all have a better conversation here. But yeah, this is basically Matt Maley's chat room where he's in all day, throwing out picks. calls and options. I know you guys wanted to hear about options, but we have to set the table. We have to give the market overview. We have to figure out what's going on in the markets, and then we go into the options. But basically, this is what we're doing a workshop here with Matt Maley. It's stocks and options. We do both. And the platform for the chat, Stefan, is inside Benzinga. You can join there on the link I put there, but I don't want to take time out of the presentation so we can focus on the markets. Just wanted to throw that in there. Thanks, guys. Go ahead, Matt.
Great, thanks, Rodrigo. But just a couple of things here. I didn't get a chance. I updated it once with one from this week, but this was from a week ago. But so we've had a couple of more nice winners. But QuantumScape, I mean, here was one we just literally, I saw there was huge call buying in the stock. It wasn't. I don't look at chat rooms. I don't look at these Wall Street bulletin. I don't look at any of that. I look at the markets. And we only talk. I mean, in our chat room, we're just talking with people who are real traders. We're not talking. These guys are trying to manipulate us. And so that's what makes it really good. But what I saw was real good, sizable buying in the call options in that stock, and I saw that was breaking out on its MACD chart, which is we can go over that in a few minutes. But one of its charts was breaking out. I made 500% in 2 days in the call options in line. Usually, what we try to do is focus on the at the money options sometimes we'll throw out some out of the money options if we're trying to put hedges on, but usually at the money. And the same thing, Intuit was another one. Well, this was on a technical basis. The stock had become incredibly overbought. It's both of its RSI, relative strength index, showed that it was getting way overbought. And then we also saw its Bollinger Bands, where it was well above its the top end of its Bollinger Bands. I'll cover that a little bit later too. And we went in and literally in just a couple of days, I spelled trading wrong there. A couple of trading days, we made several 100%. And ARC, whoopsie, sorry about that. ARC, these are some of the situations. And you see more recently, we've been looking on the QQQ. This is the triple, but we've just been able to make some money in some of these ETFs. Now here's the QQQ. Here's the here it is. Okay, this is the QQQ. Here, okay, the QQQs went down, so the TQQQ went up. And you can see what happened. It became ridiculously oversold, and so we called for it late in the day, right before it closed. They said buy some put options on that. You see it right at 126% by first thing the next morning. It went even higher. Here's when I was saying, hey, let's not get greedy. When you make that much that quickly, at least take half of your position off, because then you've guaranteed a profit. And a lot of people did hold on for a little bit more and made more of a gain. But same thing with the ARC investment. Again, this was a situation where we saw that it was breaking a key support level and at 115. So we bought the October 8th 115 puts. And this is when the stock, sure enough, it broke down. What it was a descending triangle pattern. It broke all that pattern, and we made 130% in just in literally just a couple of days, 4 days. So I would also just say that we use options too to move around some of our core positions. Now the XLE, again, I told you how I was so bullish on the energy stocks, and I still am. But I'm getting much more cautious here, and I'm saying people should take some profits or even buy some puts. And I'm actually looking on the XOP, but on the XOP, which is another energy stock ETF. But this is what we do. This is what I try to do. Here we went in, buy this XLE. Let's get aggressive, okay? We like this stock for the reasons I talked about. Then I said, double down, buy more, even look about buying some call options. Why did I say that? Because it had what's called a golden cross. And when you look back in the past, golden crosses are more compelling for some stocks and some ETFs than it is for others. For the XLE, it was very compelling. It was a very, very, very good time. So we doubled down. Not now. So we doubled down there. But then you see how its RSI, its relative strength index, got overbought. So I said, take profits. And if you don't want to take profits, maybe buy a few puts. Buy some puts in this thing, short-term puts. And then, so people here, look at this. When you drop, almost 10%, well, more than 10%, in just in just 4 or 5 trading days, 10% is going to equate to multiple hundreds of percent in the options. And again, I went back to a full position in the back in here. And again, the stock it had not gotten completely oversold, but I saw that the commodity, the underlying commodity became oversold. So again, buy some call options. That worked out too well. Again, same thing here. See how it got overbought again? It wasn't as overbought as it was here, but still getting there. And again, I saw that oil was rolling over. Take some profits, buy some puts. And again, these are the type of things, go back to full position, on and on. I don't want to go into that too much, but my point is, it's not just directional. We can use it in our core positions. And one of the things I'm saying right now, and again, I'll focus on this a little shortly, but ConocoPhillips, COP, is one of my best tier 1 picks. I love the stock long term. It has gotten so ridiculously overbought. Now I'm saying, if you just own the stock, take half profits, take half your position, because we don't want to sell it completely, because we still love it long term. Take half your profits, and even look at some put positions, some put options that go out a week or two, because the thing is just way overbought on its charts. This was the thing I talked about earlier about Viacom. Remember, let's see, it got overbought. Look how ridiculously overbought it got. The relative strength index, okay, is the thing that tells you when you get to the 70 level, you see that's a red line, that tells you it's getting overbought. Okay, when it gets to the green level, it's green because it's like that's go ahead and buy. That can be getting oversold. But when it gets way over, off of those things, then you can really take advantage of it. I saw this and I said, this is ridiculous. It was at 95. I've never seen anything even close to 95 in my life. So this was one of the easiest calls, but I don't know anybody else who made that call, to be honest with you. So it worked out very well. And we did some similar things with NVIDIA. Here's, for instance, again, NVIDIA was, got incredibly overbought right here. I looked at its MACD chart and explain what a MACD chart is. MACD is kind of like the golden cross and death cross. It's just shorter term moving averages. It's the 9 and 12 day moving average. And this cross to the downside. See what happened to the stock? The other 4 times it's seen a negative cross. The stock got hit each time, pretty good. So I knew, oh gosh, even though NVIDIA is a great company, it's got great fundamentals, its relative strength index had gotten incredibly overbought. Its MACD was starting to cross over in a negative fashion. This is a time, even though its fundamentals are good, this is a great time to short it or buy some puts. Sure enough, the stock fell 12% in just 5 days, and its options shot through the roof, and we made several 100%, as we talked about. And here was another one with Amazon here, where the stock, this is back in September. People asked me, what should we do? It looks like it tried to break out. It tried to break out. It failed again. It was getting a negative MACD cross. Look what happened when it got its MACD crosses. At other times, the stock always got hit. Well, I should have had a circle right there too, because it got hit then. And sure enough, the stock dropped. It dropped to 3,200 dropped over 200 points over the next couple of weeks, and that's where it still is right now. ARKK. Remember, I told you about that one there. I want to again. I just wanted to go back to. I don't want to get too much into that, because I know you guys really want to talk about what's going on in the marketplace. Sorry here. Okay. Before we go on, Rodrigo, I'm just going to talk about some of the things I'm seeing right now. And again, it goes back to what we've been talking about. We want to take care of this. We want to take advantage of this volatility we've seen. I think the market's going to go lower. Now here's some, but not everything. Like I said, I'm not a perma bear. And there's some opportunities, I think, right now, of some stocks that are already becoming washed out. So here's some opportunities I'm seeing right now. And then we can go in a Q&A, and we can, first of all, I can talk about stocks that you want to talk about. We'll look at the charts and take a look at them. And then, you can ask me any questions about broad markets, about the fundamentals of certain stocks, of the groups, et cetera. But I want to just look at a few opportunities that I see right now. Literally, these are ones that I saw today, that I've seen today in the last couple of days. Verizon. Okay, horrible stock. Look at the stock. It's been acting horribly. But Verizon's not going out of business. Okay, this is not a meme stock. This is not this is a good company with a 5% dividend yield. Okay, and they're not going to cut their dividend. AT&T is a very similar chart, and that also looks enticing here. But the stock, they may not, their dividend is paying 8%, which is even better. They'll pay you to wait. Even if we're wrong, if we get the timing off by a little bit, we're going to get a nice dividend out of it. So that pays us to wait. But look at this RSI, the relative strength. Remember, I said if it gets below 30, it's all the way down to 18. It's only been down to 18. It's only been this oversold one other time in the last 10 years. Okay, that was in 2017. That was almost immediately followed by a rally, okay, of 18% in just a matter of in 3 weeks. So today in the chat, I was sitting again, hey guys, let's look at the calls, the $52, $51, the basically at the money calls. At this thing going out 2 to 3 weeks. I mean, some people want to go out 2 weeks. If you have a little bit more leeway, you can go out 3 weeks. But again, the RSI is ridiculously oversold, and the Bollinger Bands chart. Oh, what the heck is the Bollinger Bands chart? And what that does is a short-term indicator. This line here in the middle, which is the gray line, that's the 20-day moving average. The green line here, that is when the stock gets more than 2 standard deviations away from that 20-day moving average. On the purple line is when it gets 2 standard deviations above its a 20-day moving average. And that shows a short-term extension. Look, see how when it got here and here and here, okay? The stock sold off each time. Now here's a situation where it got down, but it kept flying. It never really broke below that line. It did for a day, but now it's breaking well below that line. I hope you can see that, but it's well below. Now it's really getting extreme. Here, you couldn't make that call because it was getting popped a little bit, but it never really got below the line. Even here, but last couple of days, it's fallen dramatically below the line. And then you combine that with the RSI chart, I think this is a great opportunity to buy the stock. And buy the stock, number one, and even to look at the call options in this name. So you can see that I'm not just a perma bear. United Airlines.
Really quick here. Sorry, Matt, to jump in here. Just wanted to give the welcome here to Stephen, who just joined the family. So, all right, let's do it. Let's do it right. Let's do it right. Let's do it right. Hold up, guys. All right. All right, producer. But yes, guys, we'll see you there in the chat room, Stephen. Let's get on with the education. Once we're done here with this, Matt, I have a couple market themes that I'd like to go over with you that have been affecting the market. A lot of the members here, well, people that are current members of the chat room are here, but there are people that are looking into joining. So I have a couple themes. Whenever you're done with your analysis here, let me know when you're ready.
Yeah, we got like 4 or 5 more charts, but I'll go over them real quickly and just to give you an idea of some good opportunities I'm seeing right now. And most of these, for people who are already in the chat room, these are going to be kind of repetitive. But I was asked today on United Airlines, what do you think of United Airlines? And I was like, I don't like it here. Look at it. It's formed a head and shoulders pattern, and it looks like it's about to have a negative MACD cross. It's had a couple of false MACD cross, just barely ones, but when it has a big one, okay, look what happens to the stock. If this one has a big one, we're not there yet, but if it breaks below this head and shoulders, the neckline of head and shoulders pattern, that will almost certainly take the MACD down. I'm going to be wanting to own some puts in United Airlines, and it's not a stock I want to own to be long. Here's another one, Ericsson, I was asked about today. This is an ADR. Look at, again, we talked about the 100-day moving average. It's funny because the 100-day moving average isn't all that important for most stocks or most indexes. It just has been recently for several, and this is one of them. Look how this stock, okay? One of the great tools, it's a very simple rule, technical analysis. Whenever you have something has been old support, when it breaks that support, it becomes new resistance, and vice versa. If something has been old resistance, it becomes new support. Look at this. The 100-day moving average, look how good support. It was just rock solid support. Got a little bit below it, but still held. When it finally broke below it, okay, that looked like a problem. It went back up, it provided resistance, and boom, it got clobbered. Well, now it's going back up again. So if it can finally break this thing, this new resistance level, and make a higher high, this stock is going to take off. That's another one. Even though I'm bearish on the market, or at least cautious, this is another one on the positive side of things. Here's one that this one is getting a little dicey. We got up here, and you can see how the RSI, but here it's much more, not RSI, I'm sorry, it's Bollinger Bands chart, getting very extreme here. This is a dicey one because it's been straight up. You don't want to spend too much money because it could go straight up even more. It's RSI chart, you see it's getting overbought, not quite as overbought as it was here or here, but still overbought. Again, this is one that if the market, especially if the market turns down at all, this one's going to get hit really hard. So that's the one I'm thinking about. We haven't really talked about that one in several days in the chat room. That's what I'm going to be talking about tomorrow. Apple, somebody asked me today, what do you think is a good place to get in? It looks to me like it's going to go back down and test its 200-day moving average. That's been real good support, and it's rolling back over again. Looks like it wants to go down to that level, and it's not really oversold. It never really got oversold like it did here and here. So I think this has got some more downside movement to go. And the last one. Oh, well, we could go on and on, but we could talk about these other things later. But I just want to talk about the oil and gas industry because I've been very, very bullish. And I showed you earlier how I've gone in and out of the group, even though I've stayed the core long position. I've added some puts into that. And this is the XOP oil and gas ETF. And look what happens when it gets as overbought as it is now. Okay, every single time it's been followed by a decent decline. So even though I like this intermediate term and long term, I don't like it here. I think people should take profits if they own it, and even think about buying some puts, inline puts going out 2 weeks or so. I think you could see another pullback in this thing. And again, we can take advantage of even though what can be a great bull market, and I think will last at least, well, I can say a couple of years, I think, but at least another 6 months. That doesn't mean it can't come down for a couple of weeks when it gets to these extremes. Again, you can weather the storm. If you weathered it here, great. You weathered it here, great. But what did we do? As I showed you on that previous chart on the XLE, we bought puts there. We bought puts there, and we maximized we more than just weathered the storm. We maximized it. But you know, I just the last thing I'll just mention is the semiconductor index, just because we're looking at that, something for the overall market. Again, the 100-day moving average. You see how good the support. It did drop below that level, and that really scared people. But it's breaking below it again. And the key is it going to make a key lower low? It looked like it was going to break back above it and go back up. It failed at the 100-day, so we're looking right that basically just below basically 249. You break below that level, that's going to signal a significant change in trend in this group. That's not good because it's an incredibly important leadership group for the marketplace, and we know what's going on there with the supply chain issues and such. So be keeping a close eye on that in the weeks to come, but in the days and weeks to come. But and we could go on and on, but I want to answer the questions and just give you an idea of what has worked for us in the past, why it's worked, and what we're looking at right now in this chat room to what gives us something where we can again look to maximize our returns.
Yeah, that's pretty good. Give the folks here a little sneak peek of what we do in the chat room every day. Obviously, this is, you're getting a sneak peek. That's what it is. But yeah, there are some market themes that are dominating the markets right now. We got some of those from you guys here. There are some others that I've been looking at as well. I am a trader as well. So trust me, you will benefit from Matt Maley. I have. But all right, Matt. So today's numbers, CPI numbers, came about 5.5 or so. So they keep increasing. What are your thoughts on CPI? What does that tell us that's happening in the markets?
Well, I think what it's telling us is that, well, a couple different things. Number one, that the supply, the key thing about supply, the key thing about inflation is there's good inflation and bad inflation. As long as inflation's low, I mean, it's like you want, it's the Fed, they want 2% inflation. That's good because it means the economy's growing. You don't want higher than that because it starts to curb growth. But the real thing is that usually inflation is good inflation because it's created by demand. I mean, of course, okay. Everybody's has a job. Everybody's getting paid well. They're getting nice raises. I don't care if prices go up. I can afford it. But very rarely, it doesn't happen very often. Once in a while, it happens where it's a supply issue. Everybody knows about the supply chain issues that are creating it right now, and they're not going away. And if anything, they're getting worse. In many cases, we're seeing that with the chip. Apple Computer announcing, hey, they're going to cut back on their iPhone production because they can't get the chips. Okay, and this is going to, and everybody keeps saying it's just, it's going to be just 3 or 4 more months. And they've been saying that for 9 months, and it keeps getting pushed out the same amount. The thing is, the same thing happened in the 1970s. And that time, again, it was a supply issue because, and that was when OPEC cut back on their exports of oil, and the price shot up. So not only to people not making more money so they couldn't afford those price increases, and that's what's happening right now. Okay, it's even worse. Because those price increases means that you're going to cut back on the margins that companies are making. You're going to cut back on how much people spend on things. They're going to buy less because they can't afford as much. Well, that causes just the opposite. Good, solid, good inflation, demand-led inflation, it creates more. It creates the economic growth. Supply inflation deters growth. It makes it worse, and the whole thing feeds on itself. And that's what everybody's talking about, stagflation, where you have stagnant growth and higher prices because the inflation is being caused by something. It doesn't get caused very often. It's being caused by supply issues, not demand issues. And that's going to stay for a while. So kind of a long-winded way of saying that inflation. The only other thing I will say as well, and talk, the Fed, they say things and it's like anything else. I'm not trying to say they lie, but they sugarcoat things. And one of the things they do, reason why they want inflation, and I believe they want more than just 2% inflation, they actually want that, is because we are in a debt bubble. I mean, we are in, the globe is, there's more corporate debt. I mean, it's over $10 trillion in the US. Every other country in the world is under the same problem. There are two ways out of massive debt bubbles. You can default, and that implodes the system, or you can inflate your way out. It's only two ways you can do it. Okay. Now, of course, they don't want to have that kind of inflation they had in Germany in the 1920s, but they definitely want inflation. They want higher than expected inflation because that's the only way they can give the government. And then people say, oh, but if interest rates go up, it'll cost them more. Doesn't matter. They have to have inflation to get out of this debt bubble. It's the only other way is through default. And they cannot afford to have that. So look for inflation. Again, not only do they want inflation to stay high for a while. That is their goal, in my opinion.
Okay, very interesting take there. So, so the CPI and inflation are obviously related. CPI is for the products that we buy, and well, I mean, inflation is tied to everything that's happening here, and we'll get to some other topics that are related to that. So, what is your take, Matt, on China's weakening growth, considering a lot of major U.S. corporations have heavy exposure to China, like Apple, as an example, right? How do you think that's going to impact the markets here in the U.S. that we are trading?
Yeah, I mean, on the positive side of things is the economy is obviously improving. I mean, it couldn't help but improve. A year ago, or just over a year ago, it was completely shut down, all but completely shut down. So it's improving, and we'll continue to improve. We'll get growth. So that's good, even though the growth will slow down. The problem is that the problem is it's going to slow down, and you have a stock market that is pricing in ever increasing growth. They're pricing in earnings growth to stay at the huge levels it was at for the first 3 quarters of the year, and it's just not going to do that. I mean, these earnings numbers we come out now, they're going to be whatever they're going to be. The guidance, I think we're just forget about what the banks say. Higher interest rates are good. Higher inflation, that's good for our bank margins because the yield curve steepens and they make money. For everybody else, it hurts them because their cost of their products, of course, the cost of making their products hurts them, and they can only raise prices so much. So it hurts their margins. They make less profits, and that's a problem. So but again, going back to what I said earlier, China, they built up this economy for a decade on leverage. I mean, they've got cities with empty buildings. They've got highways that go to nowhere. They kept borrowing money and building with huge amounts of leverage just so they could keep their economy afloat and compete with the US. But now they're kind of doing what Japan did in 1989. They're sitting back and they're saying, we can't do this forever because we'll lose control. So they are pulling back. Their economy is slowing already. And all you have to do is look at what's going on in Japan's stock market. Again, like I remember, I talked about how their economy is fine, South Korea's economy is fine, but both of their stock markets are rolling over in a significant way. They're down 10 to 12%. And of course, as I said, stock markets tend to roll over 6 months before the economy does. They are very, obviously, they're out there in that part of the world. They are very tied to China, and they're rolling over. Why? Because China's rolling over. Their economy is going to slow, and that's going to have an impact. And eventually, it'll spill to Europe and the U.S., just like you asked, whether it be Apple, Nike, etc. But you cannot go into a kind of de-risking, deleveraging policy that they're following, much like Japan did in 1989, 1990, without it having repercussions in other parts of the world because of the second biggest economy in the world.
Okay, that's a very interesting take, Matt. Absolutely. Now, back here to my next question here. So there have been a lot of supply demand constraints happening. This is not a new story. Container ships have been parked out outside of California for months and months since I can remember. This has been ongoing, right? So how is that impacting the market? I know that FedEx and UPS a couple of months ago when they dipped, you called some puts on that, which I did trade. How do you think the supply demand is going to impact the actual market right now? And why is it different than all this time that we've been experiencing it? Is it just because of the demand end of year, or what is it?
Well, part of it's because the liquidity from the Fed and the ECB has still been coming at full throttle. So the stock market hasn't really reacted to it. Although, as you mentioned, individual stocks have, like Federal Express has really gotten hit hard. And UPS has held up a little bit better. I'm just talking about the stock. But at some point, they're gonna wake up to what's really going on. I mean, I hate to say it, but like I said before, the market is not always right. It's only always right eventually. I mean, the end of January 2020, I was screaming at the top of my lungs, this COVID thing is way more serious than people realize. The economies are going to shut down. Look what's going on. All you had to do was look what was going on in Europe. And the market didn't move. And when finally it did move, boom, it moved on a dime and it fell flat out of bed. It won't be the same this time because the economy, what's going on in China is not going to cause a total shutdown, but it is going to cause problems when people finally wake up to it. It's going to be an issue and it's going to last for a while. And one of the things we talk about, number one, we say California, they're not going to go to Los Angeles and Long Beach. They're going to be doing their, working 24 hours a day, 7 days a week. It's still not going to be enough because they don't have enough. They don't have enough truck drivers to take the containers out of the thing. And also these shipping companies, are going in saying, hey, they used to just take the container off, put it on a truck and off you go. No, they're not doing that this time. We want the containers back because we make so much money for it. All right. So what we want to do is you have to unload those containers and do a new container and then drive it off, put the container back on my boat. That takes longer. All right. This situation is seeing many people from the port at Long Beach saying this is not going to end anytime soon. They're just we could work 24. We could add all sorts of people. The constraints are still going to be there. It will get better, but it's not going to be fully. So this whole the supply chain issue is going to be with us, I think, for quite some time.
Okay. All right. That makes sense. Moving to the next theme here, Mr. Matt. So we've been obviously hearing about this famous infrastructure deal for about 2 years now, right? Market pops on it, dips on it, negotiations. We've been on and off with this deal for over a year now. So what are your takes on this infrastructure deal? What do you think it does to the market? Tie it to the actual money being spent and the inflation data.
Well, I mean, it's kind of funny because I'm less just like I wasn't worried about the budget, the debt ceiling, because I knew they always play around with that and they eventually get it passed, which they did. And that's when the market went up that day when they passed it. I'm like, that's ridiculous. Everybody knew they were going to pass it. Sure enough, the market went right back down the next day. The thing is, this will not help inflation. Keep inflation elevated. However, that's not as big a deal with. For me, inflation is the supply chain issue and the wage pressures. We see restaurants can't even. It's so hard for them to find people to wait tables and such. Wage inflation is here for a while. The thing that I worry about this budget issue isn't so much that it's going to cause inflation, is that it's not going to help the economy immediately the way people think it will. And this is what happens every time we have a big spending plan out of fiscal spending plan out of Congress. The new president, he tries to get it done in his first year because that's when they have the most of the leverage. And of course, in this case, he's got both houses. And let's get this done. Let's get this done. And guess what they do? They back end load it. Why do they back end load it? They back end load it to the fourth year of the presidency. So, first of all, it takes time to do all these things, but this shovel ready stuff, forget it. That ain't going to happen. You haven't heard that term at all during these negotiations. There's nothing that's shovel ready. Why? Because the Democrats want to make sure that in 2024, they know this is going to get done past too late for it to help them in the 2022 election. They want the thing to be kicking in 2023, second half of 2023 and into 2024. So it's helping the economy when they come up for the presidential reelection in 2024, even if Biden's too old or whatever, and feels he can't go another term, they still want the Democrats to win. And if the economy is doing well, whether it be Kamala Harris or some other Democrat, they're going to have a much better chance. That's what they always do. They've been doing this for 100 years. They back end load these fiscal spending things, and they never front end load them. So be careful about thinking, well, the economy is going to bounce back because of this big spending. First of all, it's not going to be as big as they want. It's going to be rather big. It is going to be inflationary in longer term. And shorter term, we already have these other issues to worry about in terms of supply chain. So again, it seems like everything I'm saying here is bearish, bearish, bearish. But I just say that you go back, just look at your history. You go back, Republicans, Democrats, doesn't matter. That's what they do. And it's smart politically. It just is. It's not great for Americans, but it's smart politically.
Yeah, and absolutely. And obviously we're not trying to just be bearish, but there's just a lot of things in the market right now. And there's a lot of confusion among not just retail traders, even money managers are confused, scratching their heads. So we're trying to do this to help retail traders get ahead and trade the volatility, not just sit on the sidelines like Mr. Maley was explaining. So this is some very good stuff because we need to be aware of what's going on in the markets and we need to hear the truth, right? And that's why Matt Maley's here to give us an honest opinion of really where we're standing in the market. So let's go here to my next theme here. So you kind of touched on this a little bit on the oil side. So oil's coming back up now, extremely high. A lot of people are saying that oil is going to come back down. It's going to come back down even harder. What is your take on the oil demand right now that's happening, taking into consideration the virus, right? Let's say that, the work from home, all that stuff, it seems like we're some of those things are sticking around, right? Some of those themes. Where do you see oil moving? Do you think we're really looking for another fall? What is your take on oil as of now with the markets? Do you think it's going to continue? Do you think it's topping out?
I think it's topping out on a near-term basis, only near-term basis, simply because it's overbought and crude oil is getting overbought. You look at its relative strength index, but I'm also looking at what the traders, and let's talk about sentiment. There's a thing that I look at that there's a poll, daily sentiment index, that polls the actual futures traders, and the people who trade every single day, and they have they have smart money guys, and they're every single oil company or any energy company, also the airline companies, they all have huge energy trading desks. Okay, they're trading that oil left and right. They're the smart guys. They really see where the supply and demand is. They have people in the Middle East telling them what's going on. That's their job. Okay, then you have they're called the commercials. Then you have the people who are the speculators, and they're outside. They're just trying to figure out what's going on. They tend to be wrong. Well, but the futures guys, they're in the pits. They see what's going on. They're talking to the guys, the trading desk of the energy companies every single day. They're talking to the trading desk on the airline companies every single day. They know what's going on. Well, guess what? I'm sorry. Take it back. They're the ones who are watching what's trading. They're the speculators. It's just the opposite. Okay, they don't know what's going on because they're not on the inside. And they talk to these trading desks every day, but these guys don't give them their hands. Well, guess what happened? On Monday, bullishness among futures traders went to 93%. Yesterday, I haven't seen the data from after today, but after Tuesday's trading, the 3-day average was 90%. There's nobody left to buy. They're all bullish. Okay, this is a very short. These are futures traders, so they're really fast. So I'm not saying, oh my gosh, that means oil is going to roll over and trade to $20 again. I'm just saying on a short-term basis, it's going to pull back, and that's why I'm suggesting looking at some put options on a stock like COP, which is a ConocoPhillips. I'm sorry, or the XOP ETF or the XLE, which is the energy stock ETF. The XOP is energy, oil, and gas. There's more of the drillers and some natural gas names in that ETF. Because I think they can see a pullback, but longer term, I'm still quite bullish. And the reason really is you go back to the big thing with so many countries in Europe in particular, where they walked away from the fossil fuels. And believe me, we all of us agree that we should get away from fossil fuels. But you can't do that in just a few years. You can't do it in 2 decades. It's going to take 3 or 4 decades, certainly minimum 2 decades. 2 decades minimum, more like 3 decades to get completely out of it. So you can't, and so these governments have come in and say, stop spending any money on your fossil fuels. And so suddenly they're not producing as much. That's going to continue for a while, and to ramp that back up is going to take time. And so now, and of course we have Saudi Arabia, Russia. What are they going to do? They're not looking to help us. Saudi Arabia has been yanking our chain for a long time. That we play the game, but they're looking to maximize their money as much as they can. And so they like keeping the oil prices as high as they can without really crushing consumption. And at $70 or $80, that's really, you start to get to $100, then we got problems. So when they get up to that level, I think maybe the Saudis and the OPEC will get a bit more serious about cutting back about adding production or adding the supply into the marketplace. But I think it's going to be with us for a while. And like I said, so even though I'm short term looking for a pullback that will maybe last a week or maybe two at the most, it may not last that long. That's why if you're buying put options in those, don't go out a month. You want to go out just a couple of weeks, and at the most, or maybe even next week. And if you want to do a lottery ticket, as we talk about lottery tickets, you can even buy one for Friday. Now, when I talk about lottery tickets, that means you're spending very little money because most people, if they buy a lottery ticket, they go in and spend a few bucks. They know it's money that's going to just disappear. They don't mind. I go and spend $5, no big deal. But every once in a while, if you get something that's very short dated, I'm going to spend $50 here, maybe $100, whatever it happens to be, and a money that you don't care. You say, I assume I'm going to lose this money, but you go in and unlike a lottery ticket, if you've made an intelligent decision, I think in this case, oil could roll over. You can make several 100% in just a couple of days. But again, only bet money, not just money you're willing to lose 20% on, willing your money to lose 100% on and not even blink. But again, but next couple of weeks, I think you'll see oil lower and then head back higher as we move into the end of the year and into next year.
Okay, absolutely, Matt. And just to give some of the new people here a little bit of insight of what's going on, we obviously do a top bottom approach. We find themes that are happening in the market, then we drill down to stocks, and then from there we drill down to the calls and puts. This is the logic that we're using in the chat room. This is Matt Maley's strategy as a chief market strategist. This is how an equity firm finds trades. So we look at the market and we try to understand the market. If you don't understand the market and you're trading calls and puts, for example, you might get hurt, right? Very likely. So that's why we're trading volatility. We're finding these trades here. So we have a couple more themes here to go over, but I just want to maybe jump over. I think you already went over the options, right, Matt?
Right. I'm sorry if I'm looking at. I'm just trying to log back into my Bloomberg. So when we go into a point when we ask about certain tickers, I can show them the things. So just give me 1 second just to log back into my Bloomberg because they logged me out because I hadn't been on it for a few minutes. And
yeah, and hold your questions till the end.
Okay.
Hold your tickers till the end. We're following the format where we're going over the themes, and then we're going to go into the tickers. I think we already mentioned this earlier in the presentation. Yep.
So go ahead. So as this is coming up, is there another theme that you want to talk about, or?
Yeah, well, I mean, the tapering and everything we're talking about drills down to stocks, right? It impacts stocks, and then from there we find trade ideas where we trade either calls or puts. Just for people that are just joining in here, we're not just giving out calls and puts willy-nilly like that. We're doing a top-bottom approach, a full market analysis, so that we make smart, educated trades, smart financial decisions. So tapering apparently was, I think they said they were going to do it. It was in next year, Matt?
Well, no, they came out and said, they said that and the last thing they said, probably November, but people are saying they still weren't sure. Does that mean you're going to actually start tapering in November or announce it and then start in December? Either way, it's almost certainly going to happen this year. It is going to happen this year, basically. And they had St. Louis Fed President Bullard was on yesterday, and he was even talking a little bit more hawkish because he had been hawkish, but he said, yes, we're going to start. He said, I want to start in November, not just announce it, but announce it and start in November, which was what he's been saying all along. But he also added, I think we should end it. In other words, can be completely tapered back on all of our buying by the end of the first quarter. The Fed just 2 weeks ago was saying in their release that it would be done by mid-year. So now they're talking about, and then we also have after today's employment number, the CPI. Now I wish I had said this before, but the CPI stands for Consumer Price Index, and that's why it's an inflation number. But anyway, that number has the Fed funds futures, and those are the short-term interest rates that the Fed controls. They had been saying that they would have a not just a taper, but a raising of interest rates by December of next year. Now, after the CPI number, now they're saying September of next year. So even that's getting a little bit pushed forward. So, and again, there is a difference between tapering and tightening. But the problem is that it doesn't matter to the markets. Tapering really is tightening because the tapering, I'm sorry, the QE program has pushed all sorts of liquidity into the system, and it's had to go somewhere. Guess what? The banks haven't been loaning it out so much. They've been buying assets with it. And when they have less to do that, the demand side of the supply demand picture is going to shrink. It's just, I mean, it happened after each one of the QE programs ended and the stock market went down, except for the one in 2015. I agree with that. And people say, well, if it did, the market didn't go down in 2015, the 2013, the tapering started, really ended in 2015. But it's like, well, then why can't it hold up this time? Very simple. The stock market was trading at 14 to 15 times earnings back then. It was very inexpensive, or at least it was, and it was at worst fairly valued, and at best inexpensive. Right now we're at 20 times earnings. That's very expensive, not cheap. All right, so that's why the stock market, and again, the fundamentals are trying to play catch up. But you don't have but the problem is all that liquidity. The Fed continued, even though we moved past the emergency, they continued to supply emergency stimulus into the system. And so the fundamentals could never catch up because the stock market kept going. If the stock market had stayed flat, the fundamentals would have caught up. We'd be trading at 15-time earnings, and I'd be saying, great, this is great. The market can go a lot higher. But all that liquidity kept pushing the market higher. And at some point now, liquidity, it's got to meet somewhere in the middle. And as growth slows, it'll be in the middle, a little bit lower. So the whole thing with tapering is it's been an important source. I'm not saying it's been the only thing. Jim Cramer goes out and says, all these people say that the Fed's Q has been all of the stock market rally. Maybe some people are saying that. I'm not saying that. I'm saying it has been a very important part of that. And that's why the stock market is still very expensive, even though the economy and earnings have improved greatly this year.
Okay, and we are getting a lot of questions here from the chat room, Matt. So let's just take a couple minutes to go over these questions. So let me just scroll over here up because there were several questions here. For people that can't be in the chat room, yes. So if the chat room is browser based, so you basically you can open it from your phone, you can open it from your computer. It's live, so 24/7 direct access to Matt Maley, to his option trade ideas, ins, outs, market analysis. Obviously, if you're not understanding what's happening in the markets, you shouldn't be trading options specifically. So that's why we are comfortable doing that with Matt, because he's able to be profitable for as a chief market strategist at Miller Tabak equity firm, trading volatility, bull markets, bear markets, choppy markets, Fed-driven markets. It doesn't really matter how the market is reacting. We're analyzing it and we're planning our steps. We're planning our trades in the chat room. That's where we're doing the trades. This is just a sneak peek. So yes, you're going to get all that information in the chat room. That's where he's basically going over that every day. You can also ask him questions specifically about your tickers, about your strategies, about trades that you want to make. Get his analysis. Remember, you are literally trading next to Matt Maley, chief market strategist, 4 decades on Wall Street, 10-year director at Merrill Lynch, one of the biggest funds out there in the world, and Solomon Brothers as well, which in the 80s and 90s was the hottest firm on Wall Street. So you're getting the top guy here. Basically, he's on CNBC and Bloomberg like once a week or so. CNBC Asia.
As a matter of fact, I'll be on CNBC, Bloomberg Radio while we're on. That's why I had to look off to the side here. I'm going to be on Friday at 8 o'clock. So if you have your TV on, it looks like 8 o'clock on Friday. I'll be on Bloomberg TV.
Sounds good. Yeah, and all the chat members already know. I don't know
what I'll be talking about, but a lot of things happen between now and then. So we'll see.
Yeah, well, that's the benefit of the chat room, where it's like something can happen, like today's CPI number, which was insanely high. Everybody was saying it's going to go lower because inflation is transitory, they call it, right? I mean, I lived in Nicaragua, which is a country that basically, war torn, and they destroyed the currency. And it all started like this, where it's, the transitory inflation. I've already seen this game happen out. So I was pretty confident that this inflation would not be transitory. It's possible that their intentions were, but intentions don't matter, right? It's the end result. So that's something that to me is very good, because digesting all of this information that we got today, the chip shortage from Apple yesterday, right? The CPI numbers, the jobs report, horrible. All these things happen in a time span of a day or 2 days, and totally move the market. So you have access to Matt Maley directly to discuss these things that are happening in the market. How can you position yourself, your portfolio, and you're trading with the community, right? With everybody that's in the chat room is a verified Benzinga member. It's not like one of these Reddit boards that, you have people that, many times are just bots, right? So this way you can actually start trading with smart money, with the big money. That's why 90% of retail traders fail. And the people that make it, like if you look at the numbers, it's equity firms that always end up winning. That's just how it is. And, they do have access to better research, better analysis, better resources than traders can. So yeah, maybe that can help you get a little bit, figure out what we're doing here. And Arun, how do I get in the chat room? I posted the link there. Is the chat room during the full trading time? The chat room is open all day. There's no time limit. You can always ask your question there. It's a three-way street, basically, right? You talk to Chief Market Strategist Matt Maley directly, and it's a private chat room, obviously. Matt Maley responds to your specific question, and also you interact with the other community members that have been following Matt for years, including myself. I've known about Matt for years. So how much time will I have to spend every day in the chat on car? So you can spend, literally you can go in there, ask your question, get a response or what, and have your trading feedback from Matt. But if you want to, a lot of people, I always have the chat room open. Like I'm working and I'm also trading, but I don't just have a chart open. I have resources and tools that help me trade better. One of those being Matt Maley's chat room. And I have it in my phone again, in my phone as well, because it's browser based. Let's see if we have Benzinga, then we get access to Matt Maley chat room. No, Sushi, it's totally separate. Just call me. It's totally separate. They're not related. It's same company, but yeah, we're talking about Matt Maley's chat room here. Yeah, Venkat, I'm going to show the chat room later on. We do have a discussion that we have to continue. I'm just taking a little bit of time here to answer your questions. Ceci Burden, Friday, 8 a.m. or 8 p.m. Friday all day, baby. Okay. Now, members are talking there on the weekends as well. News breaks on weekends. It doesn't have any limitation to that. So we're always discussing the news, the strategies that we're doing in the chat room. We are trading as a community. We are trading as a community. We're following Matt's trade ideas, and rightfully so. As somebody that has been doing that for over a year here, I can tell you that it's going to help you a lot, because it's not just about buy this and sell this. It's about understanding what's going on in the market so that you can actually learn, and you make money while you learn, and you're learning from somebody who is at a high level equity firm. So this is why, a lot of retail traders like it, because they're able to trade with smart money. Let's see. When will Matt be online? Well, right now he's here doing the educational workshop with you guys. This is an educational workshop, but he's in the chat room all day.
I usually get on, around 9 o'clock, and unless there's something, obviously you walk in, there's something big in the morning, I'll start talking right away, 7, 6, whatever. But most days, it's you get, because the market opens at 9:30. I kind of get in at 9 o'clock, and I'm in the office much earlier than that, but I get into the chat room and then, and I'll just I'll leave it open till, usually when it does, there's no question the vast majority of it is between 9:30 or 9:15 and 4:15 when the market, once the market closes, it dies down, but it's always open. I check it every night to make sure that if somebody hasn't asked something in the evening, and again, if something big happens during the evening, I could be on it for several hours.
Yeah, absolutely. All right, guys. So let's get to some tickers. Judy, I'll throw the link again for you, but we're going to move on to tickers here. So throw tickers. Matt, fire up your Bloomberg terminal there.
Can you see my Bloomberg terminal?
I see Citrix. Yeah, I believe you have it there. Okay. So I'm ready now. Let me know when you're ready, Matt. We got the first one by Hayan. Um,
Go
Let
ahead.
me know when you're okay. You're all ready. I've never used Bloomberg. Just so you know, guys,
Okay.
Bloomberg terminal is only for equity firms or huge hedge funds. So as a retail trader, we don't really use that much. All right. So we got Hayan with, we always get this one, Matt, Neo. Every time. All right.
I just want to make sure. Can you see that? Well, let me pull it up first.
Yeah, and if you can throw in there, maybe what you would look at into a possible call or a possible put, because we'll follow up all the trade ideas that we get here. We follow up with that inside the chat room. So just a little possible trade idea, maybe if you do find one, because we'll go over a lot of tickers here.
Yeah, and the thing is, sometimes, I mean, that's the one thing I definitely do, or don't do, I should, is a better way to put it, is I definitely don't, if there's nothing there, some people are like, hey, it's Apple Computer, you must have an idea. Well, sometimes Apple doesn't, sometimes it just trades sideways for a little while, and there's nothing really compelling to say. So I hate that people feel that they got it, and sometimes it's best just to do nothing on certain stocks. But talking about this one, can you see the chart okay? I just make sure everybody can see it.
Yeah, we can see the chart. Okay,
Okay,
that's Neo. You got it up.
Okay. Now, see, look at this. Here is the relative strength index. You can see that's very neutral. It's right in the middle there. So that's not really telling us a lot. This is the MACD chart. Now remember, the MACD chart, remember, that's where the short-term moving averages cross. You can see it's been making negative and positive crosses in a couple of different ways here, but it's the most, so it hasn't really done much. But you can see when it makes a compelling cross, like it did here, the stock went down, and what it did here, the stock went down. See here, the stock, it only went up for a little while, but it did go up. See here, positive cross, it went up for several months. It's trying to make a positive cross. I'd also note that the stock you can see here is making a higher low. Okay, look at this here. It's going boom, 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 boom. A little bit minor, lower highs, lower lows, very minor. But this low here is higher than that one. And it looks like it's finally going to make its first higher high for in a while. Okay, and so this one's looking compelling. I'm not necessarily there yet to pull the trigger, but it looks like, and I just see if I can. There we go. And bang. You can see here. Now you can probably can't see that too well, but let me just get rid of this here. I'm gonna take a second. Rid of that. And then so that's what's called a well, it's a symmetrical triangle. Get rid of that. And I'm gonna get rid of that. See this little triangle here? Okay, and this line right here is only slightly moving up, but it's a higher. And if it can break up here, then it's going to look pretty good. So I guess my point is MACD trying to do better. It's certainly not oversold, certainly not overbought, so we don't have to worry about that. And the key that we know is that, let's zoom it right in here because it's kind of. So here we have this level, the bottom line. That's your stop. That's right here at about 32 and a quarter. You get below 32 and a quarter, 32.25, that's going to be your stop out level because that means it's made another lower low and you want to get out. But this is not the most compelling chart in the world. It's kind of more neutral than anything else, but it is trying to finally get some upside momentum. And if it can break above its highs from today, which is really not that very high, that's going to be 36.68. It gets above that, that's going to be bullish for the stock.
Okay. All right. Good stuff. And let's try to chop them a little bit quickly here because we do have a lot of tickers. All right. We already went over net, Christopher. So we're going to go over to Tyler Russell's pick, Ford F, ticker F.
Okay. Okay. Now Ford Motor. Okay. Look at this stock. It's been a great one. It bounced off its 200-day moving average. I'm sorry. The purple line, it's its 200-day moving average. Okay, let me get rid of those other moving averages so it just doesn't clutter it up. So that's nice. And right up here, that looks like it wants to make a new higher high, but look, Look at its RSI chart. Okay, it's the same, almost basically the same level it made right before it rolled over the last 3 times. Here, here, and here. Hopefully, it's only a short-term situation, but for me, this has got me a little concerned. So I wouldn't be chasing the stock up here. You might even want to look at some puts on this one, short-dated puts, especially if you're long the stock. You can, it gives you a little bit of a hedge. The Bollinger Band charts are, it's extended on that. All right. I'm sorry here. But see how these Bollinger Bands, see how it's right up here? It's getting really extended. See, just like it did here, just like it did here. It's not quite there yet. So you might want to wait for one more pop to really buy the puts, but this one is getting overbought. It's one that if I own it, I'm going to take some profits. But on a longer term basis, the company is obviously, the stock has obviously done very well in the last couple months. And you see, it's even getting overbought. This is its weekly RSI chart. It's not as overbought as it was here, not as overbought as it was there. So it may, and it's not above its Bollinger Band chart. So it could still have a little bit more upside. So maybe you want to hold off with the puts, but you don't want to be, you want to be you want to have using a tight stop now if you have a long position. And if you have own the calls, I'd take the money and run. I mean, yeah, they can go a little bit higher, but you don't want to get greedy.
Okay. All right. I agree with that. All right. So let's go to Bill Bucket's ticker here. We have Overstock, ticker symbol OSTK. That is the online retail company. And I think they have something related to Bitcoin as well, or crypto.
Okay. Let's get that. Okay. Yeah, this stock is, I'm worried that it looks like it's rolling over here. Let's put its MACD chart. Okay, you see how it, okay, it's been kind of riding its 200-day moving average, but its MACD chart's kind of rolling over here. It's making a low, it tried to break above its 200-day moving average, pulled back, made a lower high. It's starting to roll back over. Let me go back a little bit further. Let's see where its trend line is. And it's kind of near a trend, it's going back to a long-term trend line. The stock's looking a little dicey here, I'm afraid. I'd want to see it trade below this trend line. See, it's right down to that trend line going all the way back to the March lows. So if you get much further weakness here, it'll give you a lower low. That's when you want to get, and it would give it a more of a MACD cross. Look what happens when it has a more significant MACD cross. The stock is absolutely pummeled. The thing happened here too. This is one, if you see the stock trade below 72, this is one I'd buy. I'd want to look at some of the options in that one. I would certainly not want to own it. I would take profits of a break below 72. And you can even, again, let's see, always one thing too, I want to make sure the options, how active are they? They're not the most active in the world. See, the open interest are just several hundred. So it's a little bit dicier. And look at the spreads. The bid-asks are very wide. So you want to avoid the options in this one. But I'm one that this stock of trade. If you own it, it falls much more. You want to get out because it's starting to roll over a little bit.
Yeah, definitely. That lack of liquidity is always something that I look at when I'm trading stocks.
Right. I mean, because if you can buy an option and get a big home run, and then you turn to sell it, and
the spread's like so.
Lose all your profit. So.
Yeah, no, I've been there, and I trade options just like you, Matt, because I learned from you. Basically, use them for volatility to get a little extra green. If we own the stock or if we're hedging, we like the stock, but we understand that a correction is coming. So it helps, it eases that. Okay, so we have a ticker here, Taiwan Semiconductors. I know that's one of your favorites, Matt, from Philip Champs, TSM. Oh, okay, you pulled it up there.
This stock is at such a key inflection point, and whatever happens next is going to be really, really, really important. And the stock's a little oversold on a short-term basis. You can see its relative strength index down here at the bottom looks oversold. But I also want to look at its weekly chart. Okay, you see its weekly chart's not very oversold. Okay, and this is a classic descending triangle pattern. Okay, so we got, that's the bottom line of that pattern. Let me give you the top line of that pattern. See this? You have, so a descending triangle is when the bottom line is flat and this thing is trading down. This bottom line, it's see it 1, 2, 3, 4, 5, 7 weeks in a row. I'm sorry, not in a row. 7 weeks in the last 6, 7 months. It's tested that, it's held every time. If it breaks below that level, and that level is, make sure I give you the exact level, basically 108, basically for all practical purposes. And again, if it gets to 107.70, that's not enough, but it gets down towards 107, 106, that will confirm that's broken this triangle. And again, you go into the, what is this telling you? It's telling you that there's really good support here. Buyers are, hey, at $108, I'm willing to buy it. I'm willing to buy it here. I'm willing to buy it there. I'm willing to buy it here. The sellers, though, are telling you, it goes up. Each time I sell it at a lower level. The sellers are more aggressive. So at some point, you worry that these guys who are buying at 108 are going to say, the hell with it, I'm out. Not only am I not going to buy, I'm going to dump my stock, and the stock gets hit hard. And so it's not, and again, we talked about the Semiconductor Index. This is by far the biggest weighting in the index, and it's 13 or 14%. In the in the SMH, this is the Semiconductor ETF. It breaks down. It's going to weigh heavily on this all-important leadership group. You know, and we look at another leadership stock in the group, Micron Technologies. Look what this thing has done. I mean, it's breaking down. It's just lower lows, lower highs, all the way down. It's getting oversold, so we actually get a little bouncer sometime soon. But the point is, I'm very worried about this stock. It needs to hold here. If it doesn't, the group is going to take it on the chin. And given the news we keep hearing on the group, it's not something I want to be. I want to make a big bet on the long side.
Yeah, not all of the semiconductors stocks do the same type of semiconductor. You know, some of them are like for memory, other are for different ones. You'll find some good ones that are doing well, but you know, overall, yes, I mean, for the overall index, it doesn't look good. But I think there are there a couple of good chip stocks that are really not that impacted by that right now?
Well, I mean, the thing is, yeah, we do have things like an Nvidia. Which is such a great company, but that doesn't mean its stock isn't overbought. I mean, they're going to be, I'm hoping the stock goes down because it will. I mean, if the broad market corrects 10, 15, 20%, this stock will go down because it's in all the indexes and people will be selling the indexes. And that's when you want to go in and buy the stock. But you can see here, right here, Taiwan Semiconductors, 15.5% of that of the SMH. So if it breaks down, you got a problem. Nvidia is the next one. But so again, you want to, but yeah, Taiwan Semiconductor, I'm not yet ready to raise a big red warning flag, but boy, it breaks much down, it breaks much lower from here. It's really going to cause some problems for that stock. So be careful on that one. And I think their put options are very liquid. You don't want to pull the trigger yet, but if it does break that level, don't be afraid to scoop up a few puts that go out a week or two, and because I think it'll be very profitable.
Okay, all right, and we're gonna go over here to the ticker from Sushi, BA, Boeing.
Oh, now here's one on a long-term basis. It's impossible not to like this stock because there are only 2 airline builders in the world. They're too big to fail. They are definitely too big to fail. And so, and of course, they had problems that had to do with much more than just the pandemic. They had the issues with the, obviously with that 737 and the crashes and such. The thing with this one, it's been dead money. You can see it's been dead money all year. It really hasn't done anything. At some point, this is going to be an unbelievably great stock because, like I said, they are too big to fail. And once they get their act together, but obviously they build airlines. It doesn't happen overnight. It takes a long time to build an airline. Here's the trend line. See how the trend line is still holding above that trend line. So I like that. But it can't get above its 200-day moving average. More recently, what I'm hoping is that, so if it gets down here again, about 213, gets down below 213, 210, that's going to be a yellow warning flag, not a red warning flag, but a yellow warning flag. If it can break above its 200-day moving average, and that 200-day moving average, right now is at 229, 230 basically. So we're looking at 230 as the key resistance level. If it can break above that, that's going to be bullish. And if it can finally make a higher high above these August highs, that's a 242, okay, then that's going to confirm. And this is a great learning point. This is how I would trade the stock. I'm going in, I really like Boeing. On long term, for the reasons I just stated. I'm going to buy some stock here. If it breaks below this trend line, I'm going to go ahead and take my losses. It won't be much, it'll be down 3 or 4%, take my losses. Okay, I'm not going to buy a lot. I'm not going to buy 100% of what I want. I'm just going to buy a little bit. Then when it gets above its 200-day moving average, I'm going to buy some more. And then when it gets above 242, it makes a higher high, I'm going to add some more. So then by then, my average price is going to be somewhere around 230. You're like, wow, that's great, but why the heck didn't you buy it all at 221 when you had the chance? Well, because I didn't know if it was going to hold this trend line or not. And we don't know what the overall market's going to do, okay? People who buy it here and then keep buying more as it goes down, it's nothing wrong with buying a little bit more when it goes down a little. But you buy it at 221, then you buy it at 200, then you buy it at 175. That's great. The stock's trading at 175, your average price is 200, and you're $25 in the hole. That is not good risk management. And it's counterintuitive. If people say, if I love a stock, I should just keep buying it. If you really know a stock and you really work from the industry, you want to do that, fine. But if you don't know a stock, you want to sit there and buy a little bit now, buy a little bit more. So suddenly the stock's trading at 250, and your average price, no, it's not 221, it's 230, but you're guaranteed a gain. Okay, you put a stop level at 230, you can't lose money. But when the stock goes down, unless it gaps, if Boeing, unless they have another plane crash, it could happen. You can't, it's impossible to lose money. But it gets down to 230, you sell the stock, no loss, and you move on. And as the stock continues to rally, you raise your stop out level to guarantee that you get a gain. But the point is, don't be afraid. So many people say, oh, I wish I had bought it all at that level. Well, maybe 6 months from now, you get a bonus or whatever, or just every month you get more money. Don't be afraid to add to winning positions. And don't say, oh, geez, I wish I had bought more. Buy more. Those professional money managers, the best mutual fund managers, Will Danoff is the best mutual fund manager in the world. He runs the Fidelity Contra Fund. He buys stock in his favorite stocks every single day. Some of them he's owned for 10 years and he owns them 400%, 500%, 1,000% lower. He's still buying it because he likes the stock and his average price is still very low. Don't be afraid to do that. Okay, so that's the real thing I would look at here. On the option side of things, I wouldn't get too aggressive until you really get that break of the 242 level. You break above that, then you can buy the call. So if the thing is, you're buying that stock on the way up, you've got a nice little position, and then suddenly it doesn't cost you a lot more money. I'll buy, okay, now I've got, maybe I've got a couple of $100 or maybe I've got a couple of $1,000 in this stock. So maybe I've got $2,000 in this stock. Now I'm going to buy $200 worth of call options and really make some money. And so you can trade around that whole thing. It's risk management. Don't just take the one time, geez, I'm going to buy it once and hope that I got the absolute low. Guess what? You're not going to pick the absolute low. I guess that's the best way to play it.
Okay, all right, and let's head over to some of the trades picks from the YouTube chat here, so we don't let him leave him alone for too long here. So we got a couple here. All right, so let's go over PLTR by Hassan.
Okay. Now here's another. Gosh, there's a couple of these neutral ones, I'm afraid, but the thing about this one, which I like, because they've had a lot of issues. There's no question. We all know that. But look at this here. Even though they're mild, it's been kind of not doing a whole lot. Oops. Well, it hasn't been trading long enough to really have a 200-day moving average. The 200-day moving average is only a couple months old. But it's they just went public a short time ago. But so I'm not. If it can break above the 200-day moving average, that's fine. But what we're looking at here is that I still like the stock. Let's look at the MACD chart too, just while we have it. Okay, see now, I'm going to get rid of these moving averages because they don't mean much because they haven't been around a long time. So just click up. But here, look at this. Okay, slightly higher high there. That's good. Definite higher low. Only a slightly higher high, but it looks like we're making another definite higher low. That's good. Okay, so at some point, one of those little marginal higher highs is going to become a much better higher high. So, and look at this MACD cross. It's getting close. It's not quite there yet. But if you get a positive MACD, and this thing, I think you'll get this thing will finally break above this level and make a real higher high and really start to go. And again, the thing is you can have a tight stop right now because I'm worried about the overall market. I'm just going to go. Those are the, let's just see here. Sorry about that. Okay, this is the same stock. I mean, it's the same thing, but it's just closing prices only. So what you would use is right here, right? This is the low, that's 21, basically $22. You want to have that as your definite stop out level. If it breaks below that, you definitely want to be out. And if you're unsure about it, which can be, this is a volatile stock, you can even use this low, which was $23.17, $23. You break below $23, you take your loss. It's not a very big loss. Take your loss and look for another entry point. But this is one, again, it's to really want to get it. You want to break it here to really get aggressive on the options. But right now it's laying the groundwork for a really good, once it finally breaks out, it's really going to go because of these mild higher lows and higher highs.
Okay, let's move over to DraftKings, symbol DKNG from Angie from the YouTube chat.
Okay, now here's another stock that that we're looking at with, okay, here, I just want to go. You can see how it got oversold here, right? And look what's happened the last couple of times it got oversold. It's seen a nice rally. So it looks like it wants to rally again. So what, hold on just one second. I'm going to put the equity. MACD, again, MACD is a good shine. What happens here is that it would be a positive cross. And basically what tells you is that it's getting good, it's getting a positive momentum, okay? And so here the stock's been trading sideways, but at a higher low. That's good. If it makes a MACD cross, it'll be about the same level here and at a much higher level here. MACD crosses at higher highs are good. So what I'm looking at right now in this stock, and again, I'll get rid of these moving averages because they're not as, well, I'm going to get rid of them for now so you can see it, but it's almost got a golden cross, which would be good. But see here, we've been since the beginning of the month. It's been trying to rally, but I can't quite get above it. I can't quite get above this these highs here. That level is basically $51. You get much above $51, and that will give you that positive MACD cross that we're looking for. Let's get rid of that so you can see what I'm talking about. See this little sideways range we've been in? Say, well, sideways range is like, oh, is that neutral? Not really, because the sideways range is taking place at a higher low, so that's good. And if it can break out that and plus get that positive MACD cross, it's really going to run. So again, this is one where I'm a little nervous about the market, so I wouldn't buy the calls yet. But you get above that 51 level, that's one where you can go out a week or two and probably have a lot of success in the calls and in the overall stock. I think it'd be a quick run to 65, assuming it's a flat market.
Okay. All right. Let's go. Let's head over here to MRO. I think that's Marathon.
Marathon, yeah.
Yeah, we talked about this one last week,
yeah.
I think.
Oops.
We keep running into the same tickers. It's funny because we do follow up with specific trade ideas in the chat room. So a lot of the stocks that you guys are looking at, we already have trading systems for those. So we do follow up in the chat room for that.
On a long-term basis, this stock looks great, but it's getting overbought. Okay, look at here. Came down, tested its 200-day moving average, rallied, and even it was tested. It didn't even get all the way down to its 200-day moving average. Bounced strongly off of it. Made a key higher high. That's very nice there. It really was having a tough time getting above that 14 level. The problem is, look at that RSI chart, getting quite overbought. And you see what happened when it got here. Only mild pullback. These weren't horrible pullbacks. But again, this is when I'm saying don't chase it. I'm not saying sell it, buy puts. COP is much more overbought than this one. I'm not as concerned. So I'm just going to say, if you like it, don't add to it yet. I think you'll be able to add to it. It comes back down and retests that 14 level. That's going to be old resistance, becomes new support. I don't even think it'll get down that far, but it gets down into the 14 somewhere. Then you can start adding to the stock again. And once it breaks its highs here, then you can, again, you have that core position. You can add some call options to it, because once it breaks that level, it's going to run, because these oil stocks are still under-owned by the institutional community. And especially you can move it towards the end of the year, all they care about, look at this here. Here's the weekly RSI. It's also overbought. Not quite as overbought as it was in March, but you see, it just tells me it's got to come back a little bit. I think it's going to get back into the 14s before it really sees another bounce. So avoid the stock. You can be aggressive and buy some puts, but it's not as overbought as the COP is. So I'm not really necessarily saying you should do that. Let me just look at the Bollinger Band chart. And you can see, look, that's a weekly Bollinger Band. Look how extended it is. Okay, it's well over 2 standard deviations. The same thing. It did it for 2 weeks there and sold off. It did 2 weeks here. Again, this is the weekly chart. It's oversold. It's overbought. You want to avoid the stock right now. Great stock longer term. Great opportunity to buy it when it dips down into the 14s. Right now, I'm going to stay away from it. Now the more that I look at it in the Bollinger Band chart, I'm even thinking that maybe it would be a good one to buy some puts. But you don't want to be overly aggressive, because we still like the group longer term.
Okay. All right. Now let's go over Connor Keegan, MMAT.
2 M's AT or A?
Yes, MMAT.
That's one of these
Meme stocks.
meme stuff. Well, again, it's again.
We got a couple. We got AMC after this one, so
Yeah,
we might as well throw in the lesson there.
Yeah, absolutely. That's all right. Let me just go. Okay. See, let's look at something else here while we're doing it. Let's look at the short interest on the stock. Ooh, see, the short interest is high. Let's go back further. See, well, it looks like it's high, but let's see how far. Yeah, short interest is still very high. Okay, so back to it again. I'm sorry. There's potential here. Again, these meme stocks are not my favorite because there's no fundamental behind it. But the volume was very high today, and a lot of that probably had to do with somebody trying to push the. Let's just make sure I got the right thing on that. No, I'm sorry, the volume, that's wrong. But there's very high short interest. I'm telling you, if this is what I'm going to do on this, because overall it's neutral. See, its RSI chart is pretty neutral. It's been kind of stuck in a range for 2 months now. So I'm going to look at it on a closing basis. And what I'm going to say, oops, sorry. What I'm going to say is if you get above this high, you really want to look at the calls. If it gets above 621 and you see a big increase in the call buying, and like the six in the they'll probably have $6. Well, let's look at the options. $6.50, $6 to $7 options. You see that, you jump right in. These, okay, yeah, they're not. See, they're okay. Only because obviously it's a very low price stock, but it has some decent volume in there. The spreads aren't crazy wide. So this is one you can look at, and the only problem is they don't have. I thought they might have 50 cent, $6. The $6, it gets above 610. You want to look at the $7 calls, and you could that could be a real good one, because they do have enough. They do have enough liquidity there. So I mean,
yeah, there's some liquidity.
Don't get rid of that one. So this one has potential because it has a huge short interest, but again, I'd want to see it break above that. And the thing is, when it breaks above 610 in one of these meme stocks, it's going to $8. So percentage.
Yeah. Okay, let's go here to the retail all-time favorite AMC stock, analyzed here by Matt Maley, Chief Market Strategist. Let's see what's the take here.
It's getting all sorts of positive news because of this James Bond movie and such, and people are going back and they're all saying the same thing. They're all saying, I really enjoy going to the movies, but it's still really expensive at $37. I mean, even at the best case scenario, you're looking at a stock. I mean, I hate to say it, it's a $15 stock on a fundamental basis. Doesn't mean it can't, see some more rallies. I'm not a big believer here. If it breaks below 30, you can see this 30 level, how important that is. That's a key support for the stock. It got down to it twice. It could be, I could draw the lines. It's like a symmetrical triangle, but also a descending triangle. If you get this breaks below 30, you do not want to have anything to do with this stock. That said, doesn't mean it can't rally further. It's like I said, it's a retail favorite, but you can see each one of its, ever since then, its rises have been a little less. And look at this James Bond. One big move one day, it really hasn't that much of an impact, and it tells you that people are getting a little nervous about the situation. I don't want to. I hate to poo-poo it because it's been a very profitable one for some people this year at certain times, but I just there it goes.
And you can't really do any fundamentals on meme stocks. Like people
no,
don't. Yeah, there's no way to do it. Yeah.
Let me just look at the short interest real quick, just while we have it. And yes, it's still. Let's see how high is. It's still very high, so you never know. But it's guesswork to find out when's the next time these Reddit traders are going to try to push it. I just guesswork for me, and it's just not. I'm not in those Reddit chat rooms, and I don't know.
Yeah, it's a very volatile one, and we're trying to find trades that have a much higher chance of success because you can't tell about. You really can't tell. A hedge fund can come in tomorrow and just short it to the ground, right? And there's no fundamental thesis that we can build around it that we know big money will get around.
It is a real company. This is not like it's not going to go to zero, but it does have fundamental value to it, but just not at $37.
Yeah, I remember that. I think bankruptcy was a possibility way earlier, but it looks like they got out. It doesn't mean they're top of the line. They're just not going to go bankrupt.
Right.
Okay. Now to something a little bit. Wow, this is a total 360-degree change, Matt. Microsoft by Amit. I do love this one. I actually do have this one in my long-term portfolio. Well,
it's something that should be in everybody's long-term portfolio, no question. The stock is actually it holds up very, very well. I mean, I am a little worried about the, if interest rates move higher with the inflation concerns, that the stock will could see some weakness, and probably will see some weakness. The key, as you can see, again, this 100-day moving average. Look how many times it either got close to it or right down to it. Look at right down to it there, right down to it there, there. Very close to it, there, slightly below, very slightly below it. If it breaks that thing, and again, which is based around the 280 level, if it breaks below 280, it's going to be below the 100-day moving average, below its, make it a key lower low. That's going to be negative for the stock. Let's look at its MACD chart. Yeah, but it's actually, look at this. It's trying to cross, but let's see. The thing is, my concern is that the stock, if it rolls over here, guys, this is really important. This is a really important time for this stock, because if it rolls back over, of course, it's going to make. See, we had a little kind of minor low. We had a lower low here, a minor lower low. This was not a lower high. It was an equal high, but it could be seen almost as a double top. If we follow that with a lower high and then another lower low and a break of the 100-day moving average, this thing is going to fail and it's going to roll right back over. So the battle lines are very well drawn in the stock. Right now, I'm kind of neutral on it. I'm leaning negative only because I'm concerned about the overall market. But if we get a 20% correction, which I think is very possible, and I think a 10% correction is likely, this stock is going to go down, and it's going to create an unbelievable buying opportunity. But again, the battle lines are very well drawn. So let me just show you here one more time, real quick. You can see 300. It's actually a little above 300. That's the level. You break above that, this stock, and if the market, it means the market. Let's just get the level. You get above that. That's about basically 305. You get above 305, that's going to be a key higher high. It's going to mean that this dip was a great big head fake, and it was absolutely no problem with the stock. If it breaks below 280, it's going to give it, again, lower high, lower low, and let's see, and this is, I wish I'd picked this up first. Let's see, here you can see the trend line going back to the March, the pandemic lows. See that? So, in a few, not very long, it's going to be at the 280 line too. So you get below 280, it's going to be below the 100-day moving average, a lower high, lower low, and below its trend line from March to the pandemic lows. That's going to scale the stock. I really hope that happens. I wouldn't be buying puts in the stock right now. No way. I really hope it happens, not because I'm going to jump on the bandwagon and buy a boatload of puts. What I'm hoping is that the stock will drop to 250-ish, and it'll be a screaming buy, both in the options market, on the call options, and in the individual stock. And just while we're here, I want to do one other thing. And okay. And look at 250. 250 is also its 50-week. This is the weekly chart. 50-week moving average. It got just down or slightly below that level at the pandemic lows, and then bounced. Obviously rallied in a major way. So I'm looking at that too. It gets down to 250. You want to back up the truck. Well, like anything else, things could change between now and then. So you want to always, if something major happens between now and then, we could always change our minds. But all else being equal, that's going to be really wash out the stock. The last time I got down to its 50-week moving average, it rallied, it doubled in a year. So it gets down to here. This is going to be a key support level. It'll probably, again, its RSI chart will be oversold. The Bollinger Bands will be oversold. You back up the truck for a great company and a stock that's being sold at a discount.
Okay. All right. So we've gone definitely over a lot of tickers, guys. For those that just joined, I want to let you know here what we're doing. This is an stocks and options educational workshop that we are doing with Chief Market Strategist from Miller Tabak, Matt Maley. Just like you see him on Bloomberg or CNBC, you have direct access to him, full access in the chat room for trade ideas, for strategies, for feedback on things that you're doing, adjusting your portfolio, all those kind of questions that you really want an educated response, right? If you really want real feedback that makes sense, that is filtering it through the right points, this is it, right? Don't go to Reddit to do research. Don't go to Wall Street Bets or any of that stuff to do research. It's very important, guys, that we stay consistent with our wins, right? So consistency is the name of the game. We want to be right more times than we're wrong. It's that simple, because we're not going all in on trades. I know that's something that retail does a lot, but that's a huge mistake, and we really try to not do that. We want to make sure that people in the chat room bank on the trades. We want to make sure that nobody's doing anything crazy, like putting all their life savings in meme stock options that expire the next day, that sort of stuff. So on top of that, we've gone over a lot of educational themes here that are going to help you find sectors that are good, that are not, that you can actually get trade ideas from. And we dig deeper in the chat room about that. So the education is ongoing. If you have a question about a particular thing, either it's, rates, bonds, yields, anything that the Fed is doing, stimulus packages, infrastructure deals, all that stuff, it impacts the market. Can't be blind to it. So how it impacts it and how we profit off of that, that's what we do in the chat room. As you know, Benzinga is for retail traders. So being able to bring you guys somebody who's been in Wall Street for over 40 years, well-known, to help retail traders improve their trading, to me, that's great, because when I started trading, there was nothing like this. There was literally nothing even close to talking to somebody at this level, in the equity firm. So I hope you guys, appreciate here all the work we're doing, because it's definitely made a change in my trading account, in my trading behavior, because that's what it is. We need to get good behaviors and get rid of the full on risk type of behaviors. And I'm talking from the retail trader perspective. That's what I am. That's what everybody here in this chat is. And we tend to make the same mistakes. But if we trade alongside smart money, if we trade along the people that are consistently profitable, that's when you start changing, right? Creating wealth is not fun, but somehow Matt Maley makes it fun, to be honest. And we're looking at long-term, guys. We're looking at long-term capital account growth here. And that way you avoid the vacuum trading, right? Avoid trading by yourself. Don't ever trade by yourself, because then you're going to fall into what I coined is basically vacuum trading, where it's just you in your room trading, trying to figure everything out. And you got to keep in mind, you have equity firms that spend millions and millions of dollars in research, and you need to also do your part. You need to give yourself a chance, right? Trying to go by public pump and dump chat rooms is how you blow up your account. It's happened to me twice. I don't want you guys to go through that. I don't want you guys to go through that experience. Instead, I want you guys to learn and earn, but not have to learn by losing, right? Learn by winning and by following somebody who's done this consistently for over 40 years at the equity level, at the
39
equity firm level.
39 years. Don't age me too quick. Don't
30.
age.
All right. We're gonna give you that 1 year off. All right. But yeah, this is pretty good because honestly, the P&L is great. I can tell you, I've been doing these trades here for over a year. Matt Maley trades options the way that I want to trade them, which is basically as a short-term trading vehicle. We're doing simple calls. We're doing simple puts. There's really like, that's it. You know, there's not more to it. We're doing calls and puts because we want to leverage trade ideas that we have in the chat room. And, you know, we're not doing credit put spreads. We're not doing any of that complicated stuff, guys. Okay. We're finding good trade ideas, simple calls, simple puts. We don't hold them for long. We go green and we're out. The Viacom put sell alert went out at 2,500%. I wrote it all the way down to 5,000 because honestly, I didn't even like, I didn't go all in, obviously, in a call or a put, but you know, that did bring some good rewards. And if I could tell you something, guys, here, when I started trading, if today I could tell the old me 2 years ago something, I would tell myself to get the education before I start putting in big amounts of cash in the market, because you know, obviously there wasn't anything like this before, but if it is available, I really think you guys should do it. Okay, so we were going over tickers here, Matt, right?
Yeah.
Okay. Okay. Chris has a question here. Please explain for us. Is there a course as well that helps? Well, I mean, as far as like questions that you have, educational, yeah, absolutely. People are asking questions all day and night in the chat room, because remember, you might be struggling with something that the person next to you might not be. So you might have a question about tapering, or question about the Fed, or question about which sectors, or you know, the chip shortage. Where can you find a bull market, right? When the markets are choppy right now. So any question that you have, whether it's educational or trade related, that's what we have the chat room for all day. So let's do something here, guys. What is one question here? We're going to pick a couple of them. We can't go over all of them, but what is one question that you would like to ask Matt Maley, Chief Market Strategist, about the markets, right? About the markets. Let's wait for the questions here to come in. And in the meantime, we can look at one last ticker here before we get these questions rolling in. Last one was Microsoft, right?
Right.
Okay, let me see who was Microsoft. CrowdStrike, CRWD, from Bob.
Okay. Well, what happened? I'm just gonna, while I was here, see why was this stock up today? Was it crouching? Okay, let's see. This guy, I just now looking at the news. Why was it up today? That's why. So let's look at the stock now. It's very strong. I was just looking at the news on the stock today. Okay, now this stock, it's again, this is the one. I just want to go back. It's always important to look at a stock going back, you know, a certain amount of time, because then you get an idea of, you know, because very volatile stocks, you look at their relative strength index charts, and they can be they have to get very, very extreme before they really get compelling. Whereas a stock like General Motors and Ford, it doesn't have to get very extreme for it to be compelling. We have a situation here, the relative strength index, the RSI, is starting to get overbought, but it's not great. Look how many times it's gotten well above its top line. So, we still got ways to go here. And again, it's been making, it seems to get down near its 200-day moving average and bounce every time. It did it again here, but a nice, clear, higher lows, higher highs all the way around here. To get a little bit of a lower low here. That scared a few people, but it was followed up by a higher low the next time. So and again, we get another higher low here, and we're looking for this thing to break out. This stock looks great. On a technical basis, again, if you want to get it, the next higher high, we'll continue that. But I'm just going to say this is trend channel, and I could. It looks like the next stop is going to be at the top of that trend channel. Let's just put something in here. Bang. See, this stock is going. You can look how much higher this stock is going. I mean, this thing's going above 300. Get to the top of that channel. At the very least, if it gets up here, that 290 level and breaks it, it's going up into the mid 300s. And so the one thing is you have a good key area to stop. If you make a lower low below 240 here. Again, it's risk management. You get below that, take your losses, limit your losses. That's maybe the most important thing you can learn, especially on a stock. You never take more than 10% loss. Get out, move on. It may be a great call and you get back into it another time, but don't take that loss of more than 10%. People, hope is just a horrible investment policy or strategy, and hope that it comes back. Oh, if it just gets back close, no. Get out. Move on and look for another one. And again, the second one is don't be afraid to hold winning positions, and don't be afraid to let them ride, because you can just raise that stop loss. And say that's not stop loss anymore; it's just a stop order, and raise that stop as you go up. One thing I will say though, if you do have a big gain in something, then you can have more leeway. I mean, if your stock's up 80% and it's like, well, geez, it's up 80% in a short period of time. I can let it fall 15% because I still have a huge profit here, and then I'll let it go up again. But from your starting point, never lose more than 10%. And but this one to me is not much fancy to it. You can just see that it's not overbought. It's had a nice trend channel here. Looks like it's going to go higher. It breaks above that 290 level. It's going a lot higher even still. So again, after yesterday's big move, it'll probably take a breather. It probably won't go straight up from here. But don't be, this one just looks like a great solid play.
Okay. All right. So we've definitely gone over a lot here today. We talked about the markets. We talked about different themes that are moving the markets. We talked about tickers. We have a question here about your chat room, Matt, and I know that you have to get going because you're busy, man. We understand that. Quick question here, and if you want right after this, we can do that so that you have time to get back to the chat room and all that stuff. So Brad is asking, what's the average hold time on the trades from the chat room?
Gosh, it is short term. We have a lot. Well, I would say a week is probably average. But there's a lot of short term trades. Well, again, there's this number of people who really like to trade those weekly options, and that's only there for a few days. And the thing is, when they really work well, and a lot of them have, you want to get out. I mean, people, you make 200 or 300%. And it's like, well, maybe it'll go up even more. Take your profit and run. Again, when a thing gets ridiculously oversold or ridiculously overbought, you can ride it for a while. But we really go. But when I suggest things, I usually go out a couple of weeks. Having said that, we also talk about putting on hedges on several months. Today with Amgen is one that I really like. It's got very, very oversold, and it's one of my tier 2 picks that I just made this week. And one of the guys in the chat room said, well, I'm thinking about having some protection. I'm a little worried about this. So I said, well, go out to November, but go out of the money, because it's just a hedge. When you go out of the money, it's much cheaper, and go out to late November. So that was a couple of months. So we do a lot of that as well. But mostly it's shorter term stuff, out a couple of weeks. And right now I'm talking about people looking at the index put options because I think the market going out 2 to 3 weeks because I think the market really is vulnerable here. So that's basically our time frame. And then like on the other tiers of the market letter, we go up further than that.
Yes, we do have also newsletters here for Matt Maley, and that's also yep. So all right, Matt. So let's get some closing remarks from you. Let's hear about your final thoughts here, not just on the markets, but on what you'll be looking into the chat room this week, and why should people join the chat room?
Well, it's just again, we're in an unbelievably exciting time in the marketplace. And we want to be able to take advantage in both directions. And if we do get a deep correction, like I think we'll get, it won't happen all at once. Well, I mean, it did one time in 1987, but even that's very rare. And there are going to be times along there where we're going to be able to make money on calls and also on some of these leveraged ETFs where you buy the 3 times ETF on the S&P, et cetera, the SQQQ, or which is the one which is the bearish one. But the point is, you want to be able to leverage these things to make short-term gains to maximize your overall returns and take advantage of these big swings in the marketplace. I mean, the big money managers, the big hedge funds, they all take huge advantage of this. Why shouldn't the rest of us do that? And that's what I'm trying to help people do. Over the next couple of weeks, I'm going to be watching these. I'm going to watch this high yield funds, watch high yield spreads because they're starting to creep up. Even though the stock market rallied today, high yield spreads widened out, shows the stress in the marketplace. Keeping an eye on China, and the thing is, there's so much leverage in the marketplace. They're trying to cut back on that leverage. We want to be able to take advantage of that when those people are forced to sell, and then we can take advantage of it on the way down. And then when the thing gets washed out, we'll be smart enough to exit the trades and look to pick up some stocks and some great long-term plays, not just in the options market, but also for someone like I was talking about with Microsoft, and buy a stock there and see the stock double over the next couple of years, just sitting there and letting it ride. So it's just, there's so many things that go into the marketplace, and you want to make sure you're not guessing. That's what I really would try to say, is that use the tools. So many times people come and say, hey, I've held this. It happened to me today where somebody was asking about a stock that they had a 249% gain. And I said, well, and they ended up selling the whole thing right there. And I said, that's great. Because I really felt that there was a number of different reasons why. For number one, it's like nobody ever lost money taking profits. But the key thing is we had a reasoning behind it, not just well, am I up 250 or should I wait to go 300? Because if the stock's not overbought, if it's still not overvalued, let it ride. And these are the types of things that we're looking at all the time, is making sure that we have the right risk management involved in what we're doing, not just something where you're licking your finger and sticking into the wind and making a wild guess. It just doesn't work very well, and you end up getting burned. And we're always going to lose money on some trades, but when you use it, some of this technical analysis and some backing up with the fundamental analysis, it suddenly raises your batting average significantly.
Okay, Matt. Well, that's definitely a great insight. I really appreciate your time here. We all know you're very busy, so we all want to definitely thank you for doing this for the members, for the prospects members that are joining today, all the people that joined, and appreciate your time here, Matt. I'm going to stick around here answering some questions about the chat room. I'll be sharing the screen now if you want to stop sharing there, Matt. And let me see. I think I got it pulled up here. Okay. All right. So we can see the chat room there. Thanks a lot, Matt. Thanks for being here with us, man. We'll see you next time. All right. Thanks.
Okay, Rodrigo. Thanks a lot. Talk to you soon.
Thank you. Thank you, sir. All right, guys. So any questions that you guys have about Matt Maley's chat room or any of the strategies that he's doing, this is your time to ask me, and I can go over anything about that. I've been trading his picks for over a year now, so I can give you some insight as far as like how it's been able to help as well. So any questions on the chat room, there is a 14-day money back guarantee on it. So you can try it out, especially now where we're in the middle of a correction. This is probably when I would probably at least use that 14-day money back guarantee. Every trade, every question that you have, feedback that you want to get, it's all in the chat room there. And as you know, Matt goes on CNBC and Bloomberg, but they ask him questions in the chat room. You get his picks from the equity firm. So just to be clear, you guys are getting equity level trade ideas, okay? Equity level research analysis, not Wall Street bets kind of stuff. We're talking about real trade ideas with fundamental analysis, basically filtered through equity firms, right? So drop in your questions there's about the chat so that I can go over those. And we're going to spend some time here answering any questions you guys have. Is there a scanner to find the best of the best from thousands of stocks that have options? Well, that's what Matt Maley does. He finds the best option trades. He is able, since he has a Bloomberg terminal, which is just for equity firms, he's able to look at institutional money moving into option trades. Okay. These are big dollars that are being moved around the market in calls or puts. Then there's a story behind it. So you get all of that as well. And obviously it's not going to be all of them, because otherwise, but you get the best ones. Yes, Matt Maley will only give you the best trade ideas that he has. I can tell you that because I've been trading them for over a year now. And it definitely has helped me learn a lot about the market, understanding how the market works. If you don't understand how the market works, why are you doing calls? Like you're asking to lose money. You might as well send a check to Goldman Sachs directly. And Judy, I did get your message. I'll be sending you the link so that you can join here for the chat room with Matt Maley. So I'll be sending that to you in a couple of minutes here. Just want to stay for a while. If you guys have questions, how often do we get options recommendations? Good question, Remy. So these are daily trades. So as you can see in the chat room, I am sharing the screen there. I think Rocco just joined there, but we're talking about the triple Qs. We're talking about AVGO, a full detailed analysis with what matters, right? Eliminating the noise, simple to understand. As you can see, we're talking, percentages and gains and rallies, and basically giving entries and exits on your trades. A lot of people go in there and they're like, hey, I'm on this trade, I'm up 200%, or like Matt was saying, well, you're going to get his feedback on that trade. Like what you should be doing. Remember, chief market strategist runs the game at equity firms. That is who you want to be. If you want to be a successful trader, you really should be dying to try to trade next to somebody at this level. No joke. As a retail trader, like if you look at the hierarchy of successful traders, the bottom is retail, and then and you go to the top, you got equity level money managers. That is who you need to be following, because retail doesn't move stocks. Big money moves stocks. So you need to start thinking and trading like big money does. And that's the beauty of it. It's really not even that complicated. So as you can see there in the chat room, we're talking about right here, Johannes. I do know him. He's a cool person. Shout out to Johannes. Thanks. I closed my AVGO position. I was up 149%. Good stuff, man. Johannes, like to see that. As you can see, you also get charts. You are able to post your charts like DB. DB is another cool guy. I know him. Shout out to DB as well. He actually uploaded his own chart with his own analysis so that Matt could give him feedback on that. You can do that. You can also do that. As you can see, we're also talking about XOP. We already covered XOP, guys, right here. We talked about it today, but we were talking about it in the chat room as well earlier, talking about ETF right there. So the conversation is ongoing. It's ongoing, and we're talking about different themes, because somebody might be trading green energy stocks, right? But somebody else might be trying to get the bounce off of oil, which it already bounced. So it's not just about what's going up right now, guys. It's about what's going to go up in 2 weeks, in 3 weeks. Now, how do you time this? It's almost impossible to time this, but you can have a better chance of catching bounces when you understand the market, when you understand what's going on and the relationship between all the things that we spoke about today at the beginning with the themes. All these things impact each other. All these things move markets. It moves the stock market. Not knowing it, not knowing how it works, it's not in your advantage. And trust me, you already have a disadvantage when it comes to comparing a retail trader to an equity level research firm. That's just how it is. But yeah, that's pretty much how we go in the chat. You ask your question directly to Matt. We spend all day talking about trade ideas there, setups, feedback on trades, and you're trading with a community. A lot of people have made good friends good relationships there, which is really nice to see. I've been able to see the improvement in a lot of people that join the chat room, and that makes me happy, right? Because if I can save one person from blowing up their account, that is all I need, right? It happened to me twice. And my goal is that no retail trader ever blows up their account. Now, it's pretty far fetched. I do know that. But if you're trading with Matt Maley, that's really what, we're trying to get there, right? We want retail traders to be profitable long term. As you know, 90% of retail traders don't make it past the first year. So, I mean, we know the odds. Everybody knows the odds. But if you're new, you likely don't. So my suggestion, my personal suggestion would be, as somebody who did start on their own, don't do it. Start with a community that cares about your long-term success. Start with a community that gives you the right mentors. Start with a community that gives you the right education. Stop trying to wing it. If you think you're going to wing a professional trading career, you are in for a lot of downside in your P&L. I'm letting you know already, but a lot of you already know, because I don't think everybody here just started today, but that's how the market works, right? You need to be right more times than you're wrong. But there's a lot of other rules that retail traders break all the time, including myself, like position leveraging and position scaling and all these other things that put us at a disadvantage. We fall into emotional trading. If we don't have a process, if we don't have a system, if we don't have an actual strategy that works, which is understanding the markets once again, we're not going to be successful long term. If you're trading whatever's up today and then selling it tomorrow because it went down, and then you buy whatever goes up that day and then it goes down, you're doing whatever. That is how retail blows up their account. Little by little, you'll be, until you eventually find that your account's down 50%. And if you're trading calls and puts without even knowing how all these things work, you will end up at zero or close to a couple pennies. Frank, the trade ideas are there all day. So Matt is always posting them in the chat. Usually you can just pop in the day. I always have the chat room open. As you can see I have a window there where I always have my chat room open. Why? It's very simple. Matt Maley has predicted the last 3 corrections that we've had in the markets with timing probably like 1-2 days apart. Okay. So whenever a correction is coming, Matt Maley's chat members, they already know when they're prepared. You can go in and look at the messages, preparing all of his members to have cash on the side so that we can buy good, high quality names, not just for long term, but also for possible, short-term calls or short-term puts, some things that can be overextended, just like the trade that he was talking about. I forget the name, Viacom. That is basically the benefit of you having Matt Maley like 24/7 in the chat room. CPI numbers came out today. Obviously, inflation is not transitory anymore. We have a lot of other things in the market, like supply shortage. We have a lot of other things that are happening right now, where these things happen all in a span of 2 days, and your entire portfolio could be deep in the red if you don't understand how these things work together. So you have to understand the markets. That's just, if you can't wing it, if you want to wing it, you can do it, but you're going to lose money. And that's what I don't want you to do. I want you to be successful in your trading. So, yes, you have to have the chat open, or you can just pop in there anytime. As far as if you guys really just want to trade options, what I would do is really just, ask Matt, hey, I'm looking at this stock. What is your take on it relating to options, right? When should I buy a call or a put? How should I trade it? Sometimes it's better to not trade it because, hey, you really have no clue what's going to happen, especially when you're in a market that's so volatile that everybody is literally calling for a correction. Things are not looking good, but there's always going to be opportunities in the market, because we don't only trade on the bull side, we also trade on the short side. And that's really how you're going to be successful in trading. If you're a blind bull, you need to be a smart bull, right? You need a smart bull and a smart bear. You can't live blindly thinking that stocks will go up forever, because that's how you blow up your account. That's how all these equity firms went bust in the 2000 and the 99 bubble. because they thought stocks only went up. And then you saw what happened. So it happens to equity firms too, but they already learned their lesson. Retail is like consistently doing this, because when you're new, you don't know all this stuff. And it's easy to fall into these meme stocks and social media stocks. And it's so easy to fall in there. Why? Because it's free and you can see it there. But that's really not helping you, to be honest. If you need real help and you really wanted to make a difference in your trading career, because that's what this is. It's not a hobby for us. We want you to be successful. You really need to start learning from people that know what they're doing. It's that simple. And I mean somebody with a verified track record, with a verified career, that has been trading at equity firms for his entire life, as a director, as a chief market strategist. That's something that, to me, the value in that is really huge compared to what the special is tonight. But it does expire at midnight, guys. So I want to let you know, if you want to get the deal, it's until midnight. The normal price is $6,000 for the chat room. We are doing a special for $1,297 for tonight. So, and yeah, we are going to get alerts. We are going to get that. We are already working on that with development. I hear you guys. I know that's what you guys want. And it's already in the works. Trust me. I push hard for you guys here. I've pushed for a lot of upgrades and stuff. And we have a team of developers that is always has a full pipeline of stuff. So definitely, yes, we are going to get alerts out there. In the meantime, honestly, I really have no problem just having the chat open. Like, to me, it's nothing. I have like 6 monitors. I'm trading and I'm working all day. And there are certain things and tools that you need to have all day, And part of that is the chat room for me, because I have it open every day in a part of my monitor for trading. So there's more to trading than just having your trading account, like your Robinhood or Webull or whatever it is. You need to find trade ideas where the good trade ideas are, period. Your trading platform is just to put in the trade. You don't need to be staring at it all day or looking at charts all day. It's more important to know what's going on than to just stare at charts and not know what's going on. So Henry, the laptop, it is a Google Chromebook that we'll be sending out to you guys, and we'll send it out after the 14 days. We do have a 14-day money back guarantee period. So that's something that if you guys want, you got it, right? So you can try it. And that's why we're so confident about it, that we give you a 14-day money back guarantee period. As a trader, I've tried a lot of other stuff. There's no money back guarantee. So the fact that we have this, it does say a lot by itself. Okay, you got the email, Judy. Sounds good. Glad you decided to join, and we'll see you in the chat room there. That's usually, I always have it open. I'm always just looking at what Matt is saying, but just want to give you the welcome here, Judy, to the Benzinga family. That's how we do it here, just like everybody else, Judy. So congratulations on this, honestly, because like I said, when I started, there was nothing like this. And I can tell you, you do not want to learn the way that I learned. I had to learn by losing money. I had to learn by blowing up my account, figuring it out, looking at these social media gurus and stock trading gurus, like little like 18, 19-year-old kids. And it was such a huge mistake. It actually does you harm to follow that kind of, to look at that as a trade idea or somebody that you need to follow as far as like trading advice. If you really want to get solid trading advice, follow somebody who's on Wall Street and has been there for 40 years. Follow somebody who is at the highest level of an equity firm, a chief market strategist. This is the person that calls the shots on what you're buying, what you're selling, and looking ahead, right? Retail buys things when they go up. Smart money buys things when they're down and right before they go up. How do they do that? They have a lot of research. They have a lot of analysts. They have a lot of resources that you and I don't have, and we cannot access. Unless you have tens of millions of dollars and hundreds of millions of dollars, you cannot access certain data. If you did not know how that works, I'm letting you know. Equity firms have access to very, very detailed data that retail, unfortunately, will not be able to access. So Matt is giving you all of this, all these trade ideas, all these setups. He's giving you all of these tips and tricks of stocks. with all of that included, right? Everything that he's using at the equity level as a chief market strategist, all of the research, all of the trade ideas that he gets from his analysts, all that stuff, you're getting it in the chat room, but you're getting the best. You're getting the best trade ideas that are out there. All you got to do is join and ask the chat members, and you'll see what I'm talking about. They could tell you all day. So yeah, Brad, I'm definitely going to work on that for sure. And I appreciate you. And look, guys, education might be boring for some people. If you really just want to be blowing up your account and buying risky stuff, I mean, that's up to you, man. If you want to do it that way, you can do it that way. But guess what? Millions of other people have already done it and blowed up their account. It's a process, guys. If you're going to be doing that kind of risky trade, like I said, you might as well just send a check to Goldman Sachs, because you're giving them all that money anyways when you blow up your account and you make these trades. So trade smarter, right? Don't follow the crowd. Follow smart money. It's that simple. If you follow the smart money, you'll do good long term. It doesn't have to be more complicated than that. And you are seeing the gains that we're getting on calls and puts, but we use them in a way that we leverage momentum, we leverage volatility. When the market was going down, and I meant really down, the previous correction, kind of like when Viacom just went down, we were making money on puts and on other stocks that were going up with calls and puts, because we are trading the volatility. That's how we use options with Matt Maley. He also is looking at institutional buying of calls and puts. That's something that he can access because he's at an equity firm. So he has that data, he has that research, and he is giving you guys that research. Obviously, he's not going to he gives it to you as a trade idea, but it's been filtered through many levels so that it gets to you by Matt. So he's giving you the best trade ideas that you could possibly get. I guarantee you that. Like, Matt Maley knows what he's talking about. Everybody here that is a member already, they already know. And, they're like, Rodrigo, stop repeating it so much. But, for the people that are new, that are not familiar with Matt Maley, you've probably seen him on CNBC. He's a special guest. There's a big difference between being a host or something. And he's on Bloomberg and CNBC Asia. And I think he said he was going to be on Bloomberg Radio tomorrow. So I'll be tuning in there. I always like to see Matt's commentaries. And you guys also get a lot of education from Matt Maley ongoing. It doesn't stop. If you were to put a price into having a trading partner who is a chief market strategist at an equity firm who's on CNBC and Bloomberg, like, if as a retail trader, if you cannot see the value in that, man, I cannot help you. I'm trying to open your eyes here, but if you cannot see the value of having somebody like Matt Maley give you picks, feedback on your strategies, on your portfolio, giving you market updates, analyzed through the smart mind. The untrained eye doesn't even know what CPI is or what inflation is or what it does, right? They don't even know how it impacts their daily lives. In the chat room, we're taking a different approach because we want you to understand what's going on in the market. We want you to get smarter. We want you to be successful, but part of that is teaching you how to be successful. It's not just giving you the trades, but we want you to know why the market is moving this way. Why the chip shortage is affecting this particular sector and not the other one. Why this particular inflation trade is working and the other one's not. The market's not so simple, guys. And the more time and effort you put into your education, it's very simple. The better you'll be, the better off you'll be. If you really are just whipping out trades, you get out, AMC's going up, or, I'm looking at my Webull account. This stock is up 200%. Looks like a good trade. Like, we got to stop doing that as retail traders. We have to start finding good trade ideas. And I'm not talking about stock gurus trade ideas. I'm talking about a chief market strategist from Miller Tabak giving you curated, filtered, smart picks, not just on stocks, but on options. So you get the best of both worlds. And if you're new and you want to learn about options, this is probably a very good chance for you to do so, because you have a legitimately verified mentor who's well-known in Wall Street, who talks with Carl Icahn by phone and other, heavy hitters on Wall Street. If you don't know who Carl Icahn is, you need to look him up, because this is somebody that a lot of people respect and have him as a very highly smart intellectual person in Wall Street. And I'm talking about Matt Maley. So I definitely appreciate all the picks and trades, but it's the people in the chat room are banking. If you're against making money, that's fine. But we definitely want, that's the whole goal here, right? We want to make money, but we also want to learn, because you also want to apply this to your own trades. But I would definitely recommend always running it by Matt Maley. Like, I think it costs you like 10%, 5% to pay like a firm to manage your money, right? Or something like that. You pay and annually, right? So it compounds. So this is why financial advisors try to make everything so complicated, so that you give up, you give them your money, and they're able to take 5, 7, 8% of everything in the account every year. So on top of having to beat inflation, which is already on the roof, you're going to have to beat your financial advisors firms that are through the roof. So we don't want you to do that, because that's going to destroy your account. If you're giving out 5% a year, in 5 years, you've already given 25%. That makes no sense to me. So my suggestion would be to learn how to do it yourself. Learn with somebody who is at a level that, as a trader, you would want to be. If you want to be a professional trader, your dream is to be a chief market strategist. That is the goal for a trader that's very successful, or a CMT, right, or a chief market technician, or a chief investment officer. You want to be in that big level, right? But obviously, hey, he's been doing this for 39 years, and this has been his entire life, working on Wall Street. So there's a lot of value in 40 years being in the market, and not just 40 years being as a retail trader, 40 years being at an equity firm, some of the biggest ones in the world. So I'm very thankful that we're able to give you guys this. I'm very thankful that we can save some people from blowing up their account, because it happens often, but a lot of people don't want to talk about it. But, I don't mind opening up and letting you guys know that, hey, it happens to a lot of people, but it happens to the people that don't know what they're doing. It doesn't happen to the people that know what they're doing. So, also, we got a lot of new members here. Brad, Syriac, Stromav. Yo, Stromav, shout out. We got like five new, all right, 5 new family members. So I'm going to have to do a mega shout out here for you guys. I'm getting all my equipment ready to give you the fair welcome. All right, guys. So here's my suggestion, okay? Trade with the smart money. Brad, shout out to you, man. Make the most out of this, okay? I can be here for hours telling you what you could do in the chat room with Matt, but it literally is what you make it. If you want to ask Matt Maley about just trading strategies that you've already been working on, or that you need a little bit of feedback, but you obviously don't want Reddit or Wall Street Bets feedback, you want professional equity level feedback, okay? Join the chat room. If you want to start following the smart money and you want to trade with the people that move the markets, and the people that trade like the people that move the markets, join the chat room. If you just want feedback on your stocks, if you already know what you want to trade, but you need help finding the best places to buy calls and puts on that stock, join the chat room. You can make it whatever you want. It's that simple. You can ask Matt whatever it is. If you want to know how to properly allocate your portfolio with certain funds here and certain stocks there, ask Matt Maley. Join the chat room. So does anybody have any other questions here? I think I've been going over the chat room for a while here. I just want to make sure you guys have questions. I'm going to post the link here again. Yeah, I've been answering questions for a while. I forgot to post the link there. Sorry, guys. James, the cost right now, we have a 70, it's like 70% off right now. Normal price, it's about $6,100. Today, till midnight, it's $1,297. That's for the full year. So you keep that 70% off. You keep that discount. It's not one of these introductory discounts where it's only valid for the first year. It's valid forever. So in 2 months, or in 1 month, or in 2 weeks, when the price creeps back up, to 1,700 or 2,000 or 3,000 in increments, as it always does with what we do here, I would definitely say, at least if you can, lock in the discount, take the 14-day money back guarantee, and make your decision. It's that simple. If you don't like any sort of cancellations or refunds, you just email me and, we'll work something out. It's, you get all your money back if you don't like it in the 14 days. You just got to contact us, obviously, for that. And let's see, Henry, I think I already answered your question on the laptop. James, we just went over the cost. Sushi, here also you are saying, but do we get trades? Yes, you get trades. You're looking at Matt whip out trades here in the chat room. And I mean, this chat room goes way back. You can look at all of the prior messages. And this is all in one day, just so you know, everything that I've been scrolling here, it's in the same day. It's today. It's not like I'm yesterday or 1 week ago. These are all things from today that we are looking at. Open right there. Apple, Verizon, ARK K, talking about the 10-year treasury yields. See, that's a smart man. Michael Martinez. Michael Martinez is the man. He knows. He's asking the right questions. You need to understand the overall market and everything else around it if you want to be successful. It's that simple, but financial advisors will make it look so complicated. So you just give them all your money and they can take 5-10% of all your life savings every year. And on top of that, this stack on fees. Like, this is why we're doing this, guys. I know a lot of people that gave their money to a financial advisor, and literally by their 5th year, they were pretty pissed off. I'll tell you that, when they saw those fees, especially if they don't perform. You don't know if he's going to perform or not. You still got to pay fees to a financial advisor, even if they blow up your account. So we're trying to give you guys the tools and the education so you can do it yourselves. And on top of that, Matt Maley holding your hand, giving you that mentorship, that education that we know we need. Okay, it's time to face the reality, guys. Let's put the ego out. Check your ego on the door. This is an educational workshop where we're all here to learn. We're all here to make money, and it's okay to make mistakes, but it's not okay to not try to become better, to try to become a better trader, to try to improve our strategies. Because if you're doing the same damn thing every day and every week and you're still losing money and you don't even know why, that's a problem. And I'm telling you, you should get professional help. But I'm not talking, once again, don't go to Reddit or any of those places. Find a verified mentor like Matt Maley, somebody who's in the game, someone you can literally say, he's on CNBC. Hey, I trade right next to him. He's my trading partner. We trade together. Okay. My trading partner is a chief market strategist at Miller Tabak Equity Firm. I don't know a lot of people that can say that. Plus, you don't know how many hoops we had to go through to be able to approve a chat room with a chief market strategist. We had to get this approved by the board of directors, Miller Tabak. So you're not going to see this a lot anywhere in the industry. We had to get this custom thing approved for you, for retail traders, because Matt Maley's on CNBC, he's on Bloomberg. They're managing millions and tens of millions of dollars. Okay, you're talking to big smart money here, guys. When I'm talking about Matt Maley. Let's see, Gregory, only 15% of portfolio managers beat the SPX. You're absolutely right. Of the 15%, is it a mixed bag? Yeah, I mean, I like the best hedge fund manager, I think, is like what, 70% annual. So we need to set proper expectations, Gregory. And I think you are on the right track. You're definitely on the right track. Absolutely. Matt Maley's been doing this for 40 years. So you definitely got to get a little deeper into that on everything he's been doing through all these equity firms. As far as the P&L of the chat room trades, I can tell you, man, you're not going to be disappointed. Chris, does Matt show us how to do some research also? Yeah. So Matt, obviously, like, you can't use Bloomberg research terminal, but Matt can, because of where he, what he is, but he gives you all the research. You can literally ask him in the chat room, hey, Matt, can you show me the short interest for AMC? Bam, pulls it out on Bloomberg. I mean, Bloomberg is a great tool, but if you can't use it, you can at least ask him, like, hey, can you throw me a chart on Verizon? Can you throw me a chart on Amazon? Can you throw me a chart on Penn Gaming? Can you throw me a chart on this or that, whatever it is? Or do you think the stock is oversold and it's good for a possible call, right? Maybe to do a short-term call. If you get Matt Maley's blessing, go ahead and pull the trigger. If you get his blessing, go ahead and pull the trigger. If you don't get his blessing, be cautious. Okay. And I'm talking from experience as somebody that If Matt Maley has called the last 3 corrections on time, why would I not follow him for his trades? You see, like it's like if somebody is really good at what they do, you want to learn from them, assuming you want to improve and you want to become a better trader. If you want to keep doing your own thing by yourself and figure it out and possibly blow up your account and maybe never come back to the market, that's a risk. That's a risk that you are taking because you have somebody like Matt Maley who's ready to help you with this. And really, for what the chat room is today with the 70% off, I literally bought calls today that were 2 times more than the chat room. So, I mean, people make what the chat room costs in a day or less, like generally speaking. So compared to what you can lose in the market to what you can learn from trading right next to a chief market strategist, you got to look at the cost benefit analysis. Would you rather spend, becoming the trading partner with Matt Maley for a full year, get all the education, all the research, all the trade ideas, all the feedback, all that stuff, trading with the community? Because for that price point, you really, I mean, it's not really that much when you're looking at how much people are blowing up their accounts at. Like the people that have called me or messaged me, they're in a different situation where they've lost $400,000 or 200 grand, 70 grand, 140 grand. It's not fun to take those calls. I don't want to take those calls. And that's why we're here, because we want to avoid you guys making these kind of rookie silly mistakes. And that's what they are. Now, once we make these mistakes, if we don't know what we're doing wrong, there's no way we're going to learn. Stock went down. Oh, well, I lost 40% of my account. Oh, well, like that's really not how we need to approach the markets. We need to start finding better trade ideas, smarter trade ideas, trade like smart money trades, because smart money, big money moves the market. Retail does not. So you want to trade the way that the big boys do. It's once you realize that is really when you're going to start doing better. I mean, at least for me, once I really understood that, everything made a lot more sense and my mentality changed as a trader. And I learned to have, more patience. Sometimes you don't have to make any trades. Sometimes you got to stay still. You don't have to be in the market every second of the day. You don't have to be whipping trades every single minute of the day. You don't have to do that. That's called over trading. Okay. You need to have high quality setups. Okay. There's no point in being bombarded with 5 trades every minute. That's another mistake that we make as retail traders. We overtrade and then, that's one of the mistakes. There's a lot that we make as retail traders, but trading with somebody who's been doing it for 40 years with experience and being successful at it really is going to knock some sense into your trades. I guarantee you that. So let's go some questions here. Sushi, just email me for this one. This is the chat room that we're talking about for the stock picks. Is this also for options and stocks? Yes, Harry, this is for stocks, options. We talk about bonds. We talk about yields. We talk about interest rates. We talk about inflation. We talk about Bitcoin. We talk about gold. We talk about oil. We talk about CPI numbers. And we talk about so many things in the chat room. But more importantly is it's understanding how that impacts certain stock sectors. Obviously, Matt already knows this stuff, like the palm of his hand. So he gives you everything ready. I mean, the thesis is already there. The fundamental analysis, if you read it, if you remember the beginning of the presentation, he mentioned he uses fundamental analysis, technical analysis, like 4 more other things that he uses as a chief market strategist when he's moving money around. So these are not just, oh, the chart looks nice. No, what about the story? What about the research, right? Equity level research. What about all that stuff? You can't leave it out. We're trying to be successful traders here. We're not trying to leave it up to the charts if it looks cute or not, because a hedge fund can come in tomorrow and say, I want to short this to the ground, put it in order for $2 billion and just buy everything short. And your beautiful chart and your higher highs and higher lows don't matter anymore. So you can't just really think about the chart as the only thing that matters. Because it definitely doesn't matter when money, I said Mooney, money moves the markets. Okay. Money moves the markets. It's that simple. But yeah, we'll send over the recording, Harry. Everybody that was here in the presentation will get the chat room on Zoom. If you're on YouTube, you will not get it, unfortunately. But yeah, so there's another question here. So yeah, just to recap, Harry, just to recap, yes, we do stocks and we do options, but we also talk about what impacts those stocks. If you don't know how the treasury bond impacts stocks or certain sectors of stocks, well, I mean, let me put it this way. It would be a lot better for you to know why the stock is moving. It would be a lot better for you to know why the change in a treasury bond is going to impact this stock, so that you can have a thesis, you can have a fundamental thesis and understand it. If you can explain it to yourself, if you can talk yourself through it, that's going to help you understand, hey, why did I take this trade? Do you have a strong thesis when you take a trade? What is your thesis? Is it just buying the dip or winging it? Like, that's not a thesis, man. So we're trying to get solid thesis. The better the thesis, the better chances of success, the more money you make, the more you learn. And as you continue learning on these blocks of knowledge that you stack up one on top of each other, you're going to find yourself that, hey, you're a pretty good trader now. You really know what's going on actually now in the markets, right? You're not just waiting to see the reaction in the market. So yeah, you're going to see a lot of calls. You're going to see a lot of put trades, mostly stock, but we trade calls and puts when we trade the stock. You don't have to do both. You can do one. You can do whichever one you want. But we're only doing basic calls and puts. We're doing basic calls and puts, nothing complicated. If you're a newbie, you're a beginner, whatever you call it, this is it for you, because you want somebody that is a professional to show you and teach you what are the best trades that you can take in the market. So if you want to know how Matt gets his research, well, I mean, you could, pretty simple, 40 years on Wall Street, working at Merrill Lynch for about 10 years as a director, working in the biggest funds out there in Wall Street, knowing the high level, big money players in the market. I mean, that's called being in the game. He's in the game. He's in there. So it's like, let's say if you want to get as an example, right? You want to get your toilets clogged. Okay. Let's say your toilet's clogged and you're buying a plumber. Do you trust the plumber that literally is its first day on the job? Or would you trust the plumber who's been doing this for 40 years? Right. So look at it that way. You don't want your toilet to be clogged, right? You gotta work with the best. If you want best results, you need to work with the best. It's that simple. It's about quality, guys. It's about quality. It's not about quantity. Okay. You want high quality trades. You don't want high quantity trades. You're not a high frequency trader. So my suggestion really would be to look for the best setups, the best hypothesis, so that you have the best chances of success in making money. It's that simple. So Henry, yeah, everybody's going to get the recording. If we cancel a subscription, yeah. So we have 14 days money back guarantee, Sushi. So if for any reason you're not happy with it, let us know. We give you a full money back guarantee. We have that across the board. So we're pretty confident. We're pretty confident to do that. So keep in mind, I mean, if you want to talk to Matt Maley every day, you can do it. If you ask me, like, that's probably the only person you should be listening to, especially in these times in the markets when inflation is going crazy, supply demand crunches. You heard his opinion on some of these themes. I don't know about you, but I have about 15 stocks that I have been jotting down that I took just from the questions that I was asking him at the beginning about the themes, right? When we were talking about CPI, we were talking about inflation, we're talking about China's weakening growth, we're talking about the supply demand constraints, we're talking about the infrastructure deal, about oil demand, tapering, jobs, debt ceiling. I already know what stocks get impacted by these themes. And that's why it's important. If you just want tickers, it's just like, let's try to understand why it's moving too, like why we want to trade this stock. What is your thesis, right? So my thesis is not because I like a stock. I build my thesis based on research and fundamental analysis and current market conditions. So everything that we went over today at the beginning of the presentation, when we talked about all these themes, are directly connected to certain stock sectors. Okay. So once you're able to do that, yeah, Sushi, we can talk on the phone. I need to finish this though. Once you're able to do that, that's when you become a smart trader, and you're able to do this a lot easier because you understand the impact that these things have in certain sectors. It's not just about give me a ticker. It's about give me a thesis. Give me the research. Why are we buying stock, right? So that would be my recommendation. Try to build a thesis, try to understand what you're doing, try to understand the markets. It's only going to help you. So Matt Maley is going to help you with all that stuff, and he's helped me a lot with it. So I'm going to drop the link one more time here just because I have a lot of missed calls here and a lot of emails from people that want to join. So I'm going to have to go talk to the folks here. I'm just posting the link one more time. The deal expires at midnight. If you can't get it, sorry, but midnight is the cutoff date. So Christopher, can you try again the link? It's working for me here. Let me see. I tried the link, it's working. So I think you guys are just trolling me, okay? Stop trolling me, Christopher. All right. You guys always there's always somebody who tells me that you can't check out. Okay. So I already tried doing it, but it's working. So, okay. You're serious, Chris? So let's do something, Chris. Give me, yeah, we will figure it out later. Don't worry. I'm not gonna like leave you out of the discount. Don't worry. But I'm going to post my information. If anybody else has any issues with the checkout, or you just want to talk to me, call me. Obviously I am in crunch time now, but yeah, that is the link for the checkout. You can go in there, sign up, 14-day money back guarantee, as you will have immediate access as soon as you join. And on top of that, you get Matt Maley's equity level research. Okay. This is not, I like the stock research. This is real, like money manager research that you're getting. So, if anybody has any other questions, let me know. I'm going to just stay around here for maybe a minute or two. If the questions roll in, make sure that you call or email me if you do want to talk after this, if you need help joining the chat room. We are basically going to be whipping out trades tomorrow. Obviously, a lot of news came out these last couple of days. So it's really good to digest the news and realize, hey, something changed in the market. It's not working anymore. So let's see. Yeah, you're gonna get, Henry, you're gonna get trade ideas from Matt, any questions that you have, all that stuff. Mary, okay, absolutely. Thanks for joining here, Mary. Everybody, I want to thank all you guys for joining today, this beautiful, awesome educational workshop. I took a lot out of this, literally, like I said, 15 trades just out of the theme conversation that we were having with Matt. So I hope you guys enjoyed it as much as I did. And obviously join the chat room, talk to Matt. Don't be a stranger. We're all a very tight community. We're all a family here of traders, retail traders, and people from all over the world. There's people in the chat room that are from Brazil, from Europe, from Asia, from all over the world, Canada. We got a lot of Canadians. So it's definitely a good environment. It is a great learning environment. When I was trying to ask questions and I was like in these public pump and dump chat rooms, you ask a question about something and immediately people dog you down. Like, they start insulting you and stuff. And it's just not a good place to learn. Number one, because of people are just you get weird people there. But on top of that, you can't trust that. You really can't trust a bot or, an 18-year-old who's in the chat room. You can't trust that as trade advice. You can't do that. It's a big mistake. You got to talk to people that know what they're doing. All right, guys. So I want to thank everybody who joined the chat room today. Thanks for all the members that joined here in huge amounts. And I appreciate that because it does show that you guys want to learn. And that's really what we're here for. So thank you, everybody, for joining here. Thank you, everybody who attended here. Matt Maley's educational workshop on how to find and trade good stocks and options. I'm going to leave the information here for a bit. Okay, as you can see, that's the chat room there. You already know how it looks and everything. And you're going to get all the research and the trade ideas from Matt there. Gregory, you too, be well, my friend. Everybody else, I wish you guys all the best. So you guys have a great, awesome trading career. I hope you guys join the chat room and join the family. Chris, I'm going to call you now. You got my number. If you can't call me now. And I look forward to seeing you guys in the next time. Thank you for your time, guys, and happy trading.